by my granddad, and we would put his little accumulator. And if you won, and then it was my brain was, it's called management. It's 4 years old.
There you go. The man you are now.
Yeah.
TV.
Sorry, ABF was 4%, 92. So moved down to hold, so 4 thing. As one of you.
Mm-hmm.
Then they also downgrade. Does nudge? No, of course, because it never goes down, does it, Luke Moore?
Those behemoths. Dividend yield now. Is it one of those ones that's just so tight it just yields so impressively? But I can't remember the last time needing to. I know that there are other shops that are as kind of high street fashion. John Lewis is doing, bringing different brands. Of course, freight. So I still don't necessarily understand. Again, it's probably not graphic. And
it's outside London. Next is a part of that. So like, all right, well, I have a suit of mine, it's all in storage in London. It's the perfect suit. You could wear it. You could wear it to a wedding. And small, you know, in society, it's very much an Edinburgh, Manchester, and Hull, and in every retailer.
Okay, yeah, worth keeping an eye on those. I mean, there's actually been this morning in JD Sports, actually, kind of on that note, they've come out with their Q2. They're like trend for North America, and they FY6 profit before tax, is going to be market expectations, and interestingly, when we calls, have a little look at those, a little bit phrases, and others in terms of gobbling up. Now, I don't know that pretty stake in we play. So, anyone in the comments, let us know.
Really?
While you're doing that, I'm just going to weed
in space today, which we're into this. We do.
Yeah, screen. Here you go. So here's the minority. Screen kind of playgrounds. They you go. Looks look. I'm going to too much about it. This part.
That
The old bowling alley parties, kind of yesteryear when you were. It was great.
shall we play a game? Our social media is there.
If you bought
Social media in at 6 in the morning. Get in. Right. We now speaking of that, the reason I am is because Luke Moore. We are top.
Very on topic.
So look, a key fight.
Who do I need to go and boss? Who do I need to go?
An invite. In Dom and Cam.
Got to get.
So you know they are the top 5 on the list, right up there. Pete Ward, maybe not.
Yeah. So I've got little Luke's just over there. Ronnie's in. Pete's next to me. If I'm going to work. Can we see?
There
we go. No. Bring up. Yeah.
is that is team the IT trading.
Should we straight? That's better. Yeah. Should we talk NVIDIA AI? Should we do that after the market? UK stocks? What do you want to do? There's a few more things to go through.
Yeah, let's do. We've had a little war among some for else.
Their earnings. Keep an eye on. It's a full. Been from 57. Nearly $87 $80 to 2 mark. And their cost of got an early charge.
G down 1%. Rio Tinto has a new operating. Are you looking up 3%? Big move there for Rios.
Alongside
I was waiting. Of course, Tom Price told us it's not a lot of long funds that were just waiting for the opportunity to get involved in Rio. So if they come in and buy them, they won't be able to wait October, November now. Maybe they've got to come in and start buying them now. Could kick off. Prudential up 1%. H1 business profit rises to 1.2 billion. That was ahead of consensus.
Is their interim 30%? You know what these okay, uninteresting.
Down 5 because that is calls.
Is that from? Is that distribution comes from? Hochschild in the auction. So the auctions have just opened up here, indicating down 2 to uncross at 3 from what broke, and that's on the show to suggest, you know, this is what our friends at Shaw in the market. But then what's important is looking at the auction itself. Tell in a little bit here. Tell group, but it's still worth buying today. Beating with, so they're being.
That's Tempest, isn't it?
It'll be.
That have started. Oh,
the old TR1 through the McDonald position reduction.
Gone below. Was actually an activist building a so £100 million buying up. It by investor has building to know everybody.
Okay.
Feared corporate.
No.
Not sure he can.
Nice. Ooh, in the open, let me just. It was. If you keep an eye. And yeah. So the other one that's worth looking at is Delata Hotel. Seen some stories. IH. This is 3.2. You're lower. Yeah. As you, that would suggest there's
So anything likes to take.
And we are back. And no, your eyes do not deceive you. This is a whole other kind of panel except for yours truly. I'm Ilya Spivak here in San Francisco. And those are Mr. Jamal Chandler and Mr. Thomas Westwater in Chicago. Gentlemen, welcome to Overtime.
Good to be here. Yeah, whole new crew, almost.
Heck yeah, I'm here to mess it up, man. I'm definitely here to mess it up. We're going to have fun. You know what I'm saying? You know how
I love it.
You know how it goes.
I love it. It's the perfect day, actually, for you guys to take over the show because the macro part of this story has gone to sleep. There's nothing going on here. It's quiet. Everybody heard from the great man on Friday. Nobody seems to want to make anything of it. We got NVIDIA tomorrow. Thomas, you want to start us off here? You wrote the piece on NVIDIA earnings yesterday. Enlighten the folks. What are we looking for here?
Yeah, I think there's really, besides for the EPS and revenue numbers that you're looking for to obviously beat, which NVIDIA has a good track record with beating estimates. The last 4 earnings, it's being on EPS, it's being on revenue, so it's done well in those metrics. What the market wants to hear is probably commentary from the CEO. Number one, on China, they're developing a new chip from the H20 that's going to be technically more advanced, but also raising concerns from some Chinese authorities that the U.S. government has their hands a little bit too much in the cookie jar of NVIDIA, and they are maybe putting in kill switches, backdoors, stuff like that. So you'll see the CEO reassure markets that they're not doing that. He's already done so. And he'll want to, solidify this revenue stream to China and guide expectations there. Another thing is with the Meta news recently that they're restructuring, which is coming alongside less spending for now at least. There might be some questions to him about, the broader AI investment theme. Is spending in data centers on AI going to keep pace? Do they expect it to drop off at all? If they, hinted at that even a little bit, I think the markets would latch on to it and perhaps create a negative reaction. So I think I think an EPS and a revenue beat are pretty well forecasted based on their recent performance. So it's going to come down to those comments.
Okay. A question for both of you, and Jamal, maybe you can start us off in the world of the practical. So obviously we get a sense of what we're looking at here as far as sort of the moving parts. Here we are at the top of the range that this thing has been in basically all month long. What are they going to tell us here that's going to mean anything? And does the risk reward make any sense to actually do anything with this?
Well, it's fascinating. I mean, the options front, you see there's about a 6% option implied expected move, right? And that's actually a little bit lower than what we've seen historically. Like over the last 12 quarters, I think it's been about 7.7%. I mean, it's interesting at a time where, God, I mean, the whole zeitgeist is about AI, right? Like, I don't know about you guys, but I don't know that there's many conversations that I have these days where somebody doesn't mention AI or somebody doesn't mention ChatGPT or something along those lines.
Sure.
And I mean, hell, I was at a baseball game this weekend with my grandmother, my mother-in-law. I shouldn't confuse them. God, I'm really in trouble. She mentioned it
there real quick. Yeah. Let's hope nobody's watching.
She mentioned it like 3 different times, right? And so, I mean, it's my kid's grandmother. That's why, grandmother for mother-in-law. Yeah, sorry. It's mentioned a lot. And obviously, this is priority number one. This is the main stock in which we expressed that opinion for AI more recently. But it's interesting that there's not this huge expected move given where we are right now, right? You're hearing things like Sam Altman say that AI is a bubble. Oh, that's interesting rhetoric coming from a guy like that. But in the sense of how much is talked about, might be a bubble. But in the sense of our stock market that we know and we live in, I don't think so. Because, I was having a discussion today about what times were like during the dot-com bubble. And for and again, I wasn't trading at that time. I chose to go to grad school. I think I was a dumb idea. But what I remember about that time is stocks used to move anywhere from 5 to 20% on any given day in either direction. And we're not seeing that at all from names like this, from names like Apple, from names like Amazon. We're not seeing from Meta. We're not seeing those type of moves. So I don't think it's a bubble, but I think it's also, I think the big thing about this stock for earnings is going to be the China situation. I mean, essentially they're having to deal, they're in the middle in the crosshairs between the two of them, like you said, with the H2O chip, and China is not necessarily possibly accepting those chips because they're worried about the tech in it. And the U.S. wants to is down to give more, but are they going to continue to give them more? Like that's the area where we are right now. And then how many tariffs are going to be attached to that overall? And again, NVIDIA said that they're willing to give up 15% of their revenue to any sales in China. But it would seem at some point the government is trying to take some type of investment from this, as they seem to be doing with a bunch of different stocks these days. So I don't know. I personally am not playing it. I already have a NASDAQ call spread. I think that's exposure enough. I mean, obviously, NVIDIA is not only the biggest stock, but it's a large part of the NASDAQ. I think there's a lot of other ways you can play it. There's the SMHs of the world that you can play. You can play AMD. Again, you're not playing it for vol crush because there's really not a whole lot of vol bid to it right now. So why would you be selling any vol in NVIDIA? More than anything, if you're playing it, you're going to be playing it for the move. And I think it's probably a little easier to express those opinions than some of the offshoots. I think CoreWeave is another one of those names that you could play against it. Obviously, that's going to probably have an effect from it. But, this is one of those times where I think this is, obviously, it's an important earnings. But I don't really have much of an opinion on the move that I expect. I usually do. Like I typically play names for moves for earnings, and I usually play, upside for the most part. It's not that I don't think this has more upside. It's just that I don't know. I don't see it being a big move. I think it could end up being kind of quiet. But I also thought Friday was going to be quiet, so who's going to listen to me?
So this is actually, I was doing this sort of macro tourist in Stocksland thing today as I was looking at what this might be, and I thought it was really interesting. I mean, obviously, when we just looked at NVIDIA, it was kind of near the top of its range. The NASDAQ, as a kind of broader benchmark, still very much inside of where we had first, oh, good, rate cuts. That was the CPI report, but not enough there to convince everyone. So for a few days there, we drift. We go down into Powell. Powell gives everybody or at least what they read as a green light. We're at 89% chance for a September rate cut on Fed funds futures here. So, okay, la-di-da, concerns diffused. We still can't get attack them. And if we look at the S&P, it's even stronger here, although, of course, we're still stuck. But for all of the past couple of days, tech seems kind of heavy. And when you look at the reporting here, so we start with the MAG's reporting on the 23rd of July, if I recall correctly. So that's right around here. So there it is. We see it. But then it's kind of quiet. We get Meta and Microsoft here. It's kind of a letdown. We get, and all of these companies are beating estimates. We get Apple and Amazon the following day. Not a whole lot here going on. And if we remember, Meta especially beat by a mile here and had a huge 12% day. Still can't make hay of it in the overall markets. And it makes me think that, I mean, at this point, all of the MAGs but NVIDIA has reported. all of them have beat except Tesla, which met on EPS but beat on revenue. And we haven't really gone anywhere in the immediate sort of reaction function. I mean, even if we look at this MAGS ETF here is those days where we start the MAGS reporting cycle with Alphabet and Tesla. That's the 23rd. Markets powered higher there, but it wasn't for these reasons. These names were stuck. There's the next batch of earnings. It's a fizzle. So I look at this almost from a kind of macro lens and go, well, these are obviously huge names. They hold tremendous amount of market cap. They're going to move the indexes. That's going to be an indicator on overall risk sentiment, but they haven't really been anything that's moved the needle, even when they beat and even when the individual stocks surge. So if the AI story is tired here from a sentiment perspective, like, okay, cool, we know the great and powerful future is coming, lots of capex is being spent, grandmothers at baseball games are talking about it, it's the hotness, got it. Okay, the Fed's going to cut rates. We heard from Powell. Cool, it's on. There's a at least right up front. Okay, it's coming. Those chances have only increased. Are these markets just tired? Have we hit a sentiment extreme? Because it seems like we're running out of good news. And the market is getting everything it wants to get, and it really isn't going anywhere. The last major moves we've had here for the S&P, here's that CPI report, here's Powell. We haven't really gone anywhere since basically the beginning of the month. We're kind of stuck at these extremes. What's the possibility that NVIDIA comes out, has a perfectly decent report, $1 a share is expected on EPS, right on the line. Let's say they deliver a little bit over. They beat by 9% last time. They've been beating in the single digits, but in the high single digits. It's not like the days when they were beating by 18%, 25%. They're beating by 4, 5, 9%. They'll beat, and then the market goes, okay, well, that's all the event risk in front of me. I don't have anything else to stand on, and we just fade because we're out of juice. Are we at an extreme here?
I think what you said is like, yeah, the market has everything it wants, and we have made a higher low here, but yet we're unable to clear into new highs right now.
Mm-hmm. Yeah.
And that's despite, getting some clarity on rate cuts coming in September. That's what the market has been focusing on alongside this AI narrative. So yeah, after NVIDIA, you'd want to see them do well. Perhaps it could give us the next leg up. But like you said, it's also an event out of the way. If it doesn't generate enough enthusiasm, maybe all this long positioning over the past couple months, some of it gets unwound, some profit taking, and maybe we have to go on to test the lows from early August. I mean, that's something that's certainly possible. I'm kind of looking at playing. Tech has kind of lagged. You've seen some rotation into things like financials and stuff like that. XLF has went on to make, I think it closed at a record high today. But things like what I'm looking at playing is catch-up trades and things that have been lagging now. Because the enthusiasm in a lot of these leaders has waned, but the market is still, broadly speaking, it's still bullish. So maybe something like regional banks are a thing to play on the catch-up trade, among other things. So I've been looking at trying to gain exposure to some of these segments that have kind of underperformed tech for the first half of the year.
Should have known.
There's definitely something here in the regional banks. To your point, Thomas.
I should have known. It took a little longer than I thought, but 20 minutes in before you came with the bearish thesis, I should have known that it was coming. I mean, I knew it was going to come. I just didn't know exactly when.
It sneaks up on you. you know it's coming, but you don't know the angle.
I agree with you to the degree that the AI story is a little exhausted. I think that's why the volatility isn't real crazy heading into the earnings. That's probably a good thing. I mean, it's not going to have some 50-point move. At least that's not what's expected. Who knows what they say, right? But just from just looking at it and looking at the options, like it's not predicting any crazy move. And I think there's something to be said. The story is probably a little bit exhausted. Everything is mentioning it right now. Everything has it. MDB just came out with earnings. Apparently they mentioned AI. I swung and missed on that one. I did a put calendar instead of a call calendar, which I almost always do. That's the thing, I think, is the story's a little tired. Does that potentially mean some pullback? I think it's possible. But again, I think pullback is different than correction, right? And so
sure.
I think you bring up a good point about financials. I actually was looking at that recently, kind of the ratio to financials to tech, and it's bigger than we've seen in the past 20 years. And it probably is, maybe some time for some financials to sort of lead a little bit. If you want a healthy market, that's what we need, right? Like you can't have all tech. It can't be the top 5 names always being the main drivers of the market. It's got to be some other stuff, the Goldmans and the JP Morgans. Quite frankly, they're just not that interesting, though. I mean,
trading wise, they're not.
I mean, they're not. And even in what they're doing, like they're still doing the same old stuff. I don't think they're not reinventing the wheel. They're not doing anything that much different. They're still, those banks that I mentioned. I mean, they still have bond desks. They still have these other areas that they make money. They still rely on consumers, et cetera. Like this is the interesting thing. When people come to the markets and they want to buy something that's new and interesting and moving the needle, this is where they go. They go to the AMDs of the world. Look at how NVIDIAs of the world. Look how AMD has kind of reinvented itself, and it's up there. Intel is playing catch up amongst everybody somehow or another. I think the government's going to find a way to make that work somehow. They always seem to. So this is the area, I guess, for now. But sure, there's probably a little bit too many people in there. It's a little crowded trade for sure.
Yeah, I mean, just looking at the performance for XLF versus XLK, I mean, this is a one-way bet here. So very clearly going all the way back, I mean, essentially, let's call it early April, financials underperform with the appearance of, and this is going to be a technical term, a sinking rock. So as we look at that, I think, yeah, I mean, if there was going to be some rotation, this would be sort of a reasonable thing to look at, if only because it looks like whatever the slope of this was seems to have started to even out a little. And maybe we're getting a little bit of anchoring here, essentially since the beginning of August. I'm sort of taken to the idea that this is a very macro kind of landscape and that it's going to come down to something that basically moves the needle on everything or doesn't. We've been talking a lot about essentially where we are in the sort of positioning space. And we see that shorts in the futures market, just looking at the Commitment of Traders report, they've been building when you look at ES futures and Q futures. And you look at this and you go, okay, well, is this speculative or is it hedging against a cash position? Because obviously the market is massively long the cash equities, or we wouldn't be where we are on these indexes. So are people opportunistically hedging in the futures, or is the build in this exposure just speculative bets that this top is going to be the top, or it's not? In my mind, it while it wouldn't qualify as hedging in the sense that it's not literally hedging underlying exposure to the index, it's hedging in the sense that obviously the market is really short the futures, probably because they're really long the individual names, just across portfolios. And so that they're starting to hedge then at such a massive level. I mean, we're, just to give you guys a sense, as of the latest numbers here, we're hovering at the most net short for, let's say, the S&P 500 since the beginning of 2024. Now, back then, did that kind of build coincide with a pullback? A little bit. Not anything that ultimately derailed anything. A little bit of a wiggle lower. It starts around April of that year, and we get a little growth scare as we go into this idea that maybe we'll have another round of rate cuts, and of course the Fed doesn't end up delivering on it until September. But it is interesting to see kind of the professional investing realm look at this and go, we need to be hedging here. This is looking like it's frothy. And so as we sort of go down the list, it makes me think, okay, maybe we don't have anything earth-shattering, but it does look like there is maybe now less ammunition to give these markets fodder for a rally, or even if there is ammunition, the markets seem less responsive to it. They're kind of yawning at the Fed. They're kind of yawning at these earnings. It makes me wonder if you don't just get a regular NVIDIA report, a regular set of PCE numbers for inflation at the end of the week, and the market goes, okay, what have you done for me lately? Which part of this haven't I baked in already? And then we really see what the wherewithal here is. Let's take a look at, while we're on the subject here, what's going on with some of these cross assets. Looking at the bonds, this is like, I guess this is what one should want out of a bonds position, I suppose, because it's moving slowly, but in a direction. Do you guys have any interest here? I have been sort of stubbornly long and looking at this very painful creep higher and saying, well, these are bonds. They're not supposed to be fast. This is how this is supposed to work, an inch at a time. Do you guys have any exposure here or looking at this at all?
I don't have exposure. I took my ZN long off last week. I've been out of ZB for 2 weeks. I mean, we're kind of holding this loose trend line since May. You know, I do expect us to gradually creep higher, you know, through the next couple months. But like you said, it's not going to be all at once. And then we get, you know, these curveballs like the Lisa Cook thing, you know. So it's, you know, and then another possible wild card is the job numbers next week. Are the markets going to have confidence? What kind of number is going to come out? Is it going to be drastically different from the trend of the past few months? If it is, is the market more skeptical of that now with the new MBS statistician? I mean, I don't know, but it'll be interesting to see how those numbers play out next Friday and how the market digests it.
Mm-hmm. Mm-hmm.
You know, ZB exposure for me. I mean, look, I get it. I mean, like you said, it's this is what bonds are supposed to do. This is not what we have seen over the last 2 years, right? Like bonds were actually pretty active. Things were happening. The will they, won't they on whether cuts are coming, right? Like it was really leading to a lot more movement in bonds, and that's why I was playing it. And I did fairly well. I mean, more recently, not like the last 2 years. Like most times, it was just like not really working well. The only trades that really did well on were the selling vol ones if they popped a little bit. And even that is a tough one because, you know, again, a bond vol pop, you guys know, is like 13 versus like 10, right? Like that's just kind of how it goes. 3 ticks versus something, you know, on the order of a tech name or something like that. So I kind of stopped with bonds it looks like my last position was on the 31st. I have eyed it up a couple of times when it's gotten to 113 ZB. And I'm like, yeah, this is it. Let's bounce. It's going to bounce to 116. And then I just caught myself because exactly what Ilya said. Like it is a slow trade. It has been really slow more recently, and it seems to have slowed down. And for that reason, I'm just kind of, you know, I feel like one of the hallmarks of this year has been things move adversely. They move down to a level where everybody gets scared. That's probably the good level to buy. And then they bounce back, and then you're able to sort of, that's been the trade. And that's actually how I made the most money in bonds this year at one point when they went down to 112s, almost 111s, basically 111s. That's when I made the most money, and it bounced, and I've been out since. And I think that's what I'm waiting for again. Unless it does that, I'm just not going to be as interested. You know, I got to preserve my sanity, like you said.
I've got a ton of duration in this thing, so I'm doing this via a TLT call vertical because obviously the vol got so ridiculously cheap when you got to 111, 112. Just, I mean, you might as well just buy calls because that's where you're going to get the best risk reward. Vol is so cheap, you can lock in easy 2-to-1 risk reward with your risk defined. So what I've been doing is essentially saying, okay, you know what? I need to put a bunch more duration in these positions. And on the one hand, dilute my exposure to the delta because you never know. The president says something, the markets don't like a Fed speaker. Suddenly, everybody's concerned about rate cuts, even though the September move has had a likelihood of, let's say, over 60% for months. So suddenly, oh no, let's get cold feet. So I've just wanted to let the markets be choppy and give them time to be a bond market and attempt to kind of look at it that way. So I've been sitting in these positions for ages. At this point, I think I've been sitting in this TLT position for 48 days, and I've still got just a little under a month to expiry. So I'm just sitting and waiting because eventually this clawing higher, one would think, is going to continue.
Do you guys think that this Lisa Cook thing is some kite flying to test the waters on if he could do this, then maybe there's enough political capital to move it through to where he can do it to Powell? Because he seems to not have let go of the Powell thing, even though he's gone through phases of backing off and then putting pressure on again. Is the Lisa Cook thing kite flying?
Yeah,
I sort of get the sense.
I think so.
Yeah.
I think so for sure. I think it's one of those situations where he's trying to get a majority, right, to eventually be able to influence rates in any way that he wants. Look, politics aside, just the man, there's plenty of data. If you look at documentaries, he's operated this way. He owned the USFL at one point in time, similar type of things that have happened. So this is just kind of, how he operates. And I think this is definitely a situation where he's trying to get a majority to influence and do what he wants. Hell, I wish I could do that. I wish I could fire somebody to get a majority of the things that I want. It doesn't work that way for me, but I think that's exactly what's happening.
Yeah, I mean, you sort of get to this thought process here, like, okay, let's say you have cause or you think you have cause. And this is why I think everybody's resisting Lisa Cook resigning. If she resigns, well, then maybe there's fire where there is alleged smoke. And then you get to turn around and go, well, hey there, Jay, aren't you supposed to be her boss? Aren't you supposed to be in charge of this? How did you let this slip through? And it opens up a line of attack. So I think they're trying to resist having her resign and trying to say, like, look, this is baseless. And we'll see if they can bat that away. But if she goes, then it becomes, at least rhetorically, something to turn around and go, Jay, this happened on your watch and you're supposed to be in charge. So did you mean to overlook this? And then you start to have a conversation about all kinds of things. I mean, we certainly know the president is not one to shy away from lobbying allegations. So I think, are looking at something that's, part dress rehearsal, part a preamble, even just to sort of get the screws turned. But you sort of wonder if this is like Zelensky in the White House, take one, take two. So we do have this September rate cut coming. So if we manage to drag the Lisa Cook story long enough for the rate cut to occur, it's like, oh, well, he wore a suit this time and said thank you, so now we're friends. You sort of wonder if you get that kind of dynamic here, where Powell cuts, the president's like, oh, well, I'm happy with him now, it's about time. Yeah, and then the whole thing just goes away because the shiny ball is a different bogey.
Yeah, I mean, I see several possible outcomes to this. I mean, there's probably numerous, but at what point trading it do we consider that it could really impact the market? I mean, you've seen it, the Lisa Cook thing, a little bit in the dollar, but you haven't seen it implicate in financial markets, equities, or anything else really to any extent. And it makes sense to me, but as a trader, do you even consider this or this possible path we're going down? Because there's more, interference, I guess you could say, like the BLS commissioner, things like that. At what point do the markets start to look at it more?
I think you've just hit the nail on the head, actually. Probably the biggest thing in my mind, and Jamal, jump in here and tell me I'm a disgruntled bear and I am doomed to be disappointed by the power of the AI supernova, as Dylan might say. But I look at this and I say, well, the dollar hasn't fallen since the beginning of July. It's obviously had an absolutely awful first half of the year for all the reasons you might imagine. There was a growth scare initially around the tariffs, so the market started to bake in more easing. There was the Liberation Day, the U.S. will cut off its nose to spite its face moment, where it looked for a second like the U.S. forgot that the dollar as a global trading currency is a huge advantage, because then we get basically borrower of perfect FICO everywhere, because nobody has an interest in us defaulting because we're the global currency of commerce. So if we default, there is no global currency of commerce, and that commerce stops. And of course, nobody has a vested interest in that, not even North Korea. So when you look at something like this and you go, okay, wait, are they really going to so clamp down on trade that demand for dollars so diminishes that they're going to knock themselves off their own perch at the top of the global financial system? And then once the markets got quote unquote yippee, and bonds, stocks, and the dollar were falling in tandem, everybody kind of backed off. And suddenly we got 90-day pauses and whoa, take it easy. No, we're not replacing Powell. Everybody relax. Once we saw that it was sort of that the administration was responsive to market discipline in a sense, we see the dollar stall, and it stopped falling even as we get this confirmation of rate cuts, which you think would be dollar bearish. All of this increasing sort of repositioning there. So I look at this and I go, okay, so if the dollar has stopped falling, then we're no longer worried that it's going to cede its status, that it's going to not be the cash of last resort if there is risk aversion, all of these things. So do we care that the president might make an inroad at the Fed? Or have we decided that actually, if the president were to do something that smelled like interference, the bond markets would get yippy again, and everybody would get put back in a box? So this dollar stabilizing here seems to suggest to me that the markets are kind of over this. That they've kind of decided, you know what, if they do something wacky, we'll just sink the bond market. And they'll go, wait a minute, but we want lower rates. It was like, well, yeah, but the rates are surging here because you keep putting term premium into the market because you're being erratic. Oh, okay, sorry. And back up. So I get the sense that maybe we're, again, at some sort of an inflection here.
I think you're right. I think inflection is definitely the word to use, especially the way that the dollar has been selling off for most of the year, like you said. And we've heard so much about all the different shorts of the dollar, which honestly which got really appealing to me at the beginning of July. I was like, this is a little bit too much.
I had a great time shorting it. Dude, the first 6 months
I bet you did.
Yeah. For all my fighting of the stock market, this is the trade that papered over those sins.
I think this is setting up to be another interesting trade. And again, I was getting long the dollar until Friday happened, and I closed out. I was short, long a put spread, short delta, long a put spread in the euro, and I closed it out because again, that just seemed like it was the death knell for any possible chance of the dollar bouncing. But like you said, it seems to have stabilized, and I feel like we could be in for another narrative shift at some point with the dollar here. And maybe at some point, those who've been short the dollar for all this time, riding it into the ground, eventually squeeze. That's just kind of the market that we've always been in, right? You can only, be long something for long enough, i.e. the NVIDIAs of the world, or you could be short something for short enough. As soon as everybody's kind of crowded in the trade, there's going to be some movement at some point in time. So it might be worth examining the idea of a long dollar again, because I could just possibly see it happening.
Yeah, and to your point, Thomas, obviously, it's not good when fiscal authorities meddle and attempt to put themselves at the levers for monetary policy. It doesn't take a very deep Googling to go, well, every single time since the beginning of time, going back to ancient China, that humanity has attempted a fiat currency system. It's failed every time but this recent iteration. And the reason is independent central banks. The printing of money has been taken away from politicians or kings or whoever happens to be interested in cheap credit at any given moment in time and can execute that by decree. So when we took away that power from those authorities is how we found ourselves now in a world where fiat is relatively stable, it works, and it's enabled, obviously, a tremendous surge of economic growth and economic prosperity for decades because credit has become so much more fungible and easy to pass around, easy to deploy, less risky to manage, et cetera, et cetera, et cetera. All of this has been a tremendously good thing. And obviously, when you threaten that, that's a tremendously bad thing. But the stabilizing of the dollar here seems to tell me maybe the market has kind of looked at the administration and said, yeah, we could tighten the screws on them to disabuse them of any kind of notions like that if push came to shove, and they're responsive. So I don't think it's that we shouldn't care about the Lisa Cook thing. I think the markets are telling us, yeah, but. And it makes me think that in this kind of an environment, especially if we have stocks stalling a little bit here and the dollar refuses to fall, even when the Fed ostensibly gives them something dovish. I mean, we saw, the euro is a great example here. Here's Powell. Here's the day after. Didn't exactly stick. So, and I mean, if you go currency by currency, in some places it's stuck more than others. But I mean, even just the yen here, there's Powell, and we're back. And this is probably the most kind of nakedly yields sensitive one of all of them. So in my mind, you sort of start to get to a place, well, if stocks were to be exhausted, if there were to be some kind of a sentiment shift, one of the key beneficiaries might well be the dollar, just because you would get a risk-on, risk-off dynamic. And if the dollar doesn't have the baggage of, oh my God, 50-year, 60-year regime change, because the U.S. has decided it no longer wants the global reserve currency, then that money goes there. And the dollar has a rally not because of yields, but just because of a risk-off sweep.
Yeah, and I think, I was thinking how to get long the dollar. I think shorting the euro is probably the thing to do. And if the euro was only based on yields, you'd probably expect the euro to continue to drift higher. But like you said, it's going to be likely on a safe haven, risk-on type event that you're going to get some price action back into the dollar. Mm-hmm. So I think that's a long dollar position is probably one of the ways I would hedge against, potential downfall in the equity market right now. And I think doing it through the euro, and I also don't like this euro chart that much right now. So I think shorting the euro is probably the thing to do here if you expect some turmoil or volatility to come into the equity market.
Yeah, I'm a little annoyed that it shook me out of the trade on Friday, honestly, but I'm going to revisit it. And you're right. This chart doesn't really look that good. It's kind of like floating. It's hanging in there. It's just needs a little push. We'll see what happens.
Yeah, it seems like we have this like ugly looking series of lower highs and lower lows, but they are lower highs and lower lows. So you get this sense that there is a kind of regime change here from that explosive rally that we saw, even just with the naked eye, without being any kind of a technician, just looking at it with a crayon and going, seems to be rounding out something here. So let's get to the hands-on and the practical. Jamal, how are you putting this on if you're putting it on? I mean, we have IV rank of 37, so it's not like vol is cheap.
Yeah. It's not cheap, but I don't mind taking directional swings, even if I was a little bit high in the currencies, because again, overall the implied vol is on a relative basis, it's fairly low, right? Like, I mean, it's 7 implied vol right now. Like, if it does come in, it might come into what, 5.5? You know what I mean? So yeah. I'm not going to get killed like that. I'm really looking for the convexity trade and looking for the moves to the downside. So I would go out to Nove. I'd buy the 117, 115 put spread. That seems to be fine. I like that risk reward. It's a little like, it's about 1 to make, 1.5 or so, right? Like, I can live with that. And again, I think the way I get beat the most is if I'm just wrong and the dollar continues to fall. And I feel like there's more problems with that, with the dollar continuing to fall overall. To Thomas's point, I mean, that's one of the ways that we have hedged the market, but it's been really weird at times this year, right? We've seen big up days in the dollar and big up days in the market. Mm-hmm. But generally, over time, we've mostly seen that inverse relationship. And so if the dollar does, continue to fall, I'm long equities. I'll be fine with that. But this is definitely one of the plays I got to revisit. revisit. I allowed the market to shake me out of it on Friday. It looked like it was about to be on, man. I mean, seriously, you guys saw that. Like, it looked like not only were we going to have another big day up on Monday, but it seemed like this is it. We're headed for rate cuts and just price them in. And honestly, we really haven't seen that follow through in the dollar nor in bonds.
No. And that's sort of my spider sense is tingling for this reason. Like, I look at it and I go, okay, so you got CPI and then a flat line. Now you got Powell and then a flat line. It's almost like we're getting told things we already know. So all we're really taking away is the uncertainty. So there's a little one day, ooh, yay, it's the good outcome and not the bad outcome. So Powell didn't rug pull the markets, woo-ha. And then the uncertainty comes out of the market. It's good for a day. And then it's like, well, but what didn't we know about that? That was already priced in. We just needed to be told that speculation is reality. Okay, cool. Next. And it feels like you're kind of running on fumes. The 6E contract is, in all fairness, a little large for me. So what I've been doing is just using the futures, the micro futures, outright. And of course, spot as well. So when I've been looking at this, I've just been looking at M6E and just holding outright shorts. In fact, you can actually see him on the screen.
Yeah, it's pretty cheap.
Yeah, so I basically started getting in right at the top of this thing, right as it started, and I've been sitting on it this whole time. I've probably been sitting on it for almost a month now, just basically saying, okay, this thing, whatever it's doing, the risk reward has become better to be short. If you're wrong fast because you take out these near-term highs. If you're right, you're asymmetrically right because you just had a horrible 6 months for the dollar to start. And my boat's loaded. I'm short the pound, the euro, the Aussie, the yen, the Swiss franc, the Canadian dollar. I'm short it all.
Thai baht.
And
yeah, right. He's short every currency in the world.
I haven't quite become so confident as to have an opinion on the Thai.
You know, I just thought about this. I know I said November, but actually I might go out to January. It's actually a similar risk reward. And I think I'm going to end up going out to January because I need some duration on this. Honestly.
Yeah, I think duration
totally
makes
agree.
sense. And that's the nice thing about just taking an outright position in a micro contract because you could just roll it if you need to and you can wait because eventually, you know, as long as you're not any crazy length, you know, tying up your capital, that makes sense. And, you know, there is like the long-term plays for the dollar going down with people saying it's getting dethroned right now and this is the early phase. But for that to happen right now, there would need to be a replacement for the dollar. The euro can't do it. There's not a unified fiscal landscape in the EU.
For sure.
The yen can't do it. The economy of Japan is just not big enough. So it's the dollar, even if you think it's going to get dethroned, it's going to happen over decades and not even over years. That would be far too short.
Absolutely. I think that's spot on. Like, show me a currency with the liquidity and the market depth that can replace the dollar. I'll wait. I'll probably grow a beard down to my knees while I'm waiting because there's just not an alternative. It doesn't exist. But the only kind of gnawing thing at the back of my head, and I think that's why the markets kind of freaked out in April and they were happy to see the administration responsive, is, well, is there an orderly replacement? No. But is chaos, uncertainty, and mayhem always an option? Yes. And so there's been instances, obviously, in human history where we've done things in spite of our best interest and defaulted not to an orderly transition from one regime to another, but to death, pain, and mayhem, both literally and financially. So I thought the markets were very concerned in April when, you know, the president came out with the foam board I think everything was cool until the foam board came out. when he came out and said, "Look, okay, there's going to be a baseline tariff. There's a floor of 10%," and everybody said, "Ha, a flat number. We can work with that." And then the foam board came out, and everybody freaked out.
It was a wrap.
So soon as that foam board was out, and there was all kinds of different rates on it, everybody said, "Oh my God, okay." They want to kill their own golden goose, and everything went crazy. So I think the markets needed to know that's not what's going on. They needed to know that the administration is willing to learn, willing to put the foam board down, and willing to understand. You don't kill the dollar. That would be just completely counterproductive to everything they want to achieve. For one thing, rates would surge, and that's not what they want at all. So it seems like now that we've kind of gotten back to a sort of uneasy status quo, if there is risk aversion, if there is some kind of a shift in thinking here on risk, probably the most interesting trade on the board is the dollar, rather than attempting to fight a stock market which sort of preternaturally hates going down. FX market is a two-way market, and I'd be remiss not to mention that if you really want to get flexible with the management of size in these positions, there is always spot. And here, you can take a trade on all of the same sort of futures that you would be looking at. Obviously, there's futures equivalents to all of these. I've been, for example, doing the yen on the spot side because there are no options for a micro 6J contract that's liquid and usable. And 6J is big. The recent futures we've added on the franc, on the kiwi, we don't have micros of that, and they're not liquid. But if you wanted to take those bets, sometimes they're more attractive than elsewhere. Spot is your friend, and you can manage your exposure the same way as you would being outright long or short the futures, only you don't have to worry about expiration because it rolls automatically, and the size is much more manageable. You can get it down to something really small as a part of your overall exposure.
Yeah, I mean, the size component for spot is the biggest advantage. I think you can tailor nearly any size you want, so that's a big plus, especially if you have a small account.
I thought I was clever at the beginning of last year. I thought I had a yen turn on my hands and got just absolutely shredded in 6J futures. Macro is terrible at timing. So my approach is always take a small position, risk defined, needle the market a little bit. If the move's wrong, take it off. Maybe do that 5-6 times before the move actually goes. But when it's a macro move, it's big. So that one winner washes 3-4 small losers, and you end up in the right side of the P&L column. But if you can't take those small positions, if they can't be risk defined, if they're going to be big 6J contracts, they'll crack your skull in if you're not careful. So I've definitely moved in places where you don't have liquid micro futures. I live in spot land.
That is a good T-shirt. Macro is terrible at timing. Put it on T-shirt.
Terrible at timing. Terrible at timing. I will be the first to tell you. With that, gentlemen, overtime is out of time. I might get that tattooed on my forehead one of these days. Thank you, gentlemen, for joining us. That was awesome. Perfect vibes before these NVIDIA earnings. Don't go anywhere, everyone. I'll be right back with macro money just after a short break. And of course, overtime is back tomorrow with another new and interesting cast of characters. So definitely come and join us. Where is the follow through? That's the question that we're asking after explosive lead in for sentiment at the end of last week from Fed Chair Powell. We don't have as much on the calendar this week, but you'd think with that kind of vigor, the markets would have a built-in desire to keep the good times rolling, but that is not where we are. And so after another quiet day, we look ahead to consider here. As ever, this is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to do here is take a look at what the price action has suggested as we move through this week and consider what we might look at next to get a little motion, because we certainly don't have that here. So let's first just remind ourselves briefly. This was how the markets behaved in the wake of Fed Chair Powell's speech at the Jackson Hole Symposium, where he ostensibly gave the green light to an interest rate cut in September and some variety of rate cut cycle to follow. S&P surges, NASDAQ surges, yields are down across the board, gold is up, the dollar gets whacked. We see the euro here up almost 1%. The yen does get up a full percentage point. Bitcoin, the risk sentiment on steroids of assets, that's up 4% here, a little bit more. So very, very clear cut. This is good for sentiment, the markets say. This is going to be rate cuts, the markets say. How lovely that Powell didn't rug pull the markets. There was certainly concern going in, as we discussed on the show yesterday, between August 12th, when the markets got that CPI report that they decided that they would like, despite some mixed cues, and decided this would be good enough for the Fed to start cutting rates. And the Powell speech, everything else in between was either sideways or down. So there was some concern there. This was a good bit of relief for markets, clearly. And then we look at how we've been performing so far this week. Now, I took this snapshot of yesterday and today just a little bit before the close. So we've wiggled around a tad on these readouts since then, but only a little bit. There's not been any major moves to change the landscape here into the close in a material way. So as we look at this, consider we're soggy on stocks in the best of cases. NASDAQ erring lower, but basically flat. S&P down a little bit. The situation in yields a little bit soggier, the 10-year, so the long end of the curve stable. The front end still coming in a little bit, but that doesn't seem to be influencing anything from a macro sense. Gold is up a touch, perhaps mirroring what we're seeing in the 2-year, but perhaps most eye-catching, Bitcoin is down sharply, so sentiment is weakened clearly, and the dollar is launching a spirited recovery against its major counterparts. It's almost fully erased its Powell Day loss against the euro. Euro down just about 0.7, if we round it off, of a percent so far this week. The yen down almost 0.4%, and that's probably the most nakedly rates sensitive of the major currencies against the dollar. So this is not a market that's willing to say that we're going to run with Friday's narrative, risk on, dovish speculation on maximum, ride up stocks, ride up gold in earnest, sell the dollar. That is not the dynamic that's emerging here. And certainly we can see gold is a little bit up. The 2-year rate that is the most sensitive to immediate policy expectations, that's a little bit lower this week. So we're seeing a little bit of continuation there, but sentiment is clearly struggling. The dollar is clearly holding. And this is not for lack of conviction after Powell's speech in this rate cut narrative. This is comparing the probabilities of that cut, the current rate, of course, the current rate range, 425 to 450 basis points. That's this right here. And we can see now we're hovering right around 89% chance that we're going to take a step lower from this range by 25 basis points and have a rate cut. So let's consider how this has behaved recently. So a week ago, we were north of 80, but a little bit lighter. Yesterday, we were a little bit lighter than that, and we've only seen more conviction. So it's not as if there's been a meaningful change in the likelihood that September will see a cut. We were in the upper 80s just after CPI and even approaching 100% probability there. The readout that we have here doesn't have those data points. The furthest back we have is a month ago, and that's giving us still north of 60% on the likelihood of a cut. And we can see that over the course of that month, the likelihood has only increased and has been relatively stable before Powell. This is the 19th here, and after. That's just the beginning of this week and today. So looking at all of this together, clearly it seems like the markets have the dovish directionality that they want. In fact, they've had it relatively convincingly before the Fed chair spoke, and they haven't really gone very far thereafter. But the follow-through on what this might have been, an extrapolation of the good vibes for risk sentiment, that's clearly not occurring. Moreover, the actual outlook for the view through the rest of this year and for next year has been shifting in familiar patterns. We still are locked in to the 50 basis points that we've been circling around for this year, going all the way back to May. And that lines up with the Fed's own outlook that they've been holding on to since December of last year. So pretty baseline there. As for next year, we can see that view has only grown increasingly dovish. And so now we're looking at 5 cuts between now and the end of next year. We're looking at least 2 of them here. We're looking at least 3 now fully discounted for next year. This is where perhaps the disparity is, and perhaps why the markets are not following through immediately, because what we're seeing is that the markets would have to have the Fed adjust a good long way in terms of its forecasting to line up with this much more dovish view. In June, the Fed had only 1 cut on the menu for 2026. And of course, when they meet on September 17th, not only are we going to get now the widely expected reduction, we're also going to get a new summary of economic projections, where the Fed is going to say how many more rate cuts it intends to do thereafter. Now, it's running out of calendar to do that second cut. There are meetings left after September in October and December. So if the Fed sticks with the 50 basis points for this year, then as widely expected, one of those meetings is going to give you that second cut. But the real question will be 2026, where there is a big disconnect. And that hasn't changed. So it doesn't seem like there is an easy path for dovish sentiment to extrapolate here, because the markets have already gone where this year is benchmarked and are already way ahead of the Fed as far as next year is concerned. And so this then shifts our focus, absent any kind of major U.S. economic data until the incoming PCE report later in the week, which we will tackle here tomorrow. The thing that's left on the calendar are earnings from NVIDIA. And because there is so much market cap locked up in these Magnificent Seven names after tech's heroic outperformance and the tremendous power of this AI narrative that we've witnessed around the markets, this becomes not just one company reporting earnings. This becomes something that can have an impact on overall sentiment just because of its weight in driving the indexes. And if there is a shift in sentiment, well, then that might extrapolate across the major markets and the major asset classes outside of equities as well, and start to impact gold and the dollar and interest rates and so forth. And so I thought that it would be helpful outside of sort of the usual stock perspective on the financials and the company's prospects and its narrative to look at this as a kind of macro tourist in stocks land and consider it from the perspective of a macro surprises all around, but for Tesla's EPS, which hits the nose here. Otherwise, Alphabet, Meta, Microsoft, Apple, Amazon, they all report better than expected results. Meta kind of famously beats by a long mile here. And of course, on the day of, this was a 12% odd rally for the stock itself. We can see the other ones are relatively close, pretty decent beat for Amazon, but otherwise we're pretty close to forecasts and just enough that the company can pat itself on the back and say, well, we did a good job of under-promising and over-delivering. We gave the markets guidance that we could then top. So all's well that ends well. Next report. And of course, here's NVIDIA. The expectation is we're going to come in at $1 EPS per share on revenue of $45.81 billion. And that'll be coming at us after the close tomorrow and give us a sense for where we're going for the rest of the week. Maybe if this ends up having the gravitational pull of a company that is as large as it is. Of course, just look at market cap and you very easily see of this giant bunch, this is the largest. And so the weight of a big move here on the indexes would be significant. But let's consider how these have gone so far. This is the MAGS ETF that tracks the collective performance of the Mag 7 here. And we can see that while we've had these beats, even when they've been big beats, the overall response function here has been soggy at best. So here's Google and Tesla that start us off. Here's Meta and Microsoft. And they report after the close here. This is that big Meta beat. So you get this giant gap. But ultimately, the market's faded. And then when Apple and Amazon report, they keep fading. So we get these better than expected results, but they're not really giving the market anything to rally on. But wait, you might say, well, maybe the market was just waiting for all of these things to come out and then rallied thereafter. Well, not so fast. Here's the performance of that Mag 7 ETF relative to the NASDAQ and the S&P. And I've used the ETFs here, the Qs and SPY, to give us the most sort of comparable set of things to evaluate. And we can see that indeed SPY has outperformed a little bit recently. The NASDAQ was outperforming essentially until we got into the last few sessions here, going back into the middle of last week. And here we can see TEGs starting to lag a little bit, but on the whole, comparable performance here, up or down, give or take 1.5%. The MAGs are outperforming with a gain of almost 4.5%. But we can see that the view here seems to be less so Mag 7 specific and more so beta. So the underlying sentiment with a little bit of a kicker, because of course we don't have the dilution of an index in these names. These are just 7 stocks, and their volatility is going to be relatively higher than the indexes. And we can see where these moves begin. So again, going back here, we get through the earnings, then we get this move higher. That's this move here, which nicely coincides with the beginnings of repricing for Fed rate cuts in earnest. This right here is the implied rate into December's Fed funds futures contract, so essentially where rates are by the end of the year. And we can see here that we go and get more dovish exactly in the period that we get this upswing. So we get a level shift in rate cut expectations. We can see that an extra rate cut appears here. We go from 4.05 to about 3.85 here by the end of the year. So you get this dovish shift, and that's what seems to be propelling markets here. We can see we reach a crescendo on that, tellingly, on the 12th. Right here, that's where that CPI report comes out. So we get all this dovish speculation into CPI. Then the market gets soggy into Powell. We get Powell right here. Sentiment pops again, and we've stalled. So it doesn't appear like it's these names that are powering the move in mags. It's that stocks are up in general, and that they're up on Fed policy speculation, and when it runs out, they fizzle. So this, of course, starts raising an important question. Now, it is certainly compelling to look at the recent performance from NVIDIA and say, well, chances are they'll beat on the upside. They seem to be good at guiding accordingly. And while we're probably not going to get these heady beats like we had toward the end of 2023, the beginning of 2024, I mean, especially we can see here in 23, we get these fat double-digit beats and some even larger earlier in the year. We seem to have benchmarked these down to something more reasonable into the single digits, but the first quarter was by no means soggy at 9.89%. So maybe we get a smaller size beat as the markets re-benchmark this a little bit and end up somewhere in the vicinity of these 5% moves. But to expect this to beat would be the baseline. And indeed, if it beats by, let's say, only 2%, 3%, that might be in the realm of the disappointing. The bar is, let's say, somewhere between 5 and 10% of a beat would be sort of relative baseline, which is already something of a bar to clear. Moreover, if we look at these numbers from FactSet for how this second quarter reporting period has worked out so far, we can see an interesting sentiment shift. It would appear that when companies have positive earnings surprises, historically, they get a lift of 1%. In this cycle, only 0.4%. This is the 5-year average here in the gray. For negative surprises, we have an almost a more than doubling, as a matter of fact, of the historical sell-off that you'd get. And we can see here, of course, markets are even historically more responsive to downside surprises than upside surprises because stock markets are biased long. And so their status quo that's priced in is that things will be generally good and or better. Markets obviously know to expect companies to try to guide lower than beat relative to those expectations. And so, or guide on the soft side, we should say, not necessarily lower as in earnings going down, but guide modestly so they can beat. And so the response to that sort of baseline, considering it's essentially in the stew for how people look at stock markets, is relatively more modest than if the algorithm breaks and you do get a downside surprise and there's a larger move on the downside, 2.4%. But in this current cycle, we can see the punishment is more than double historical norms, down 5.5% on misses. Moreover, this entire ride up from April's Liberation Day panic lows has been met with increasingly negative speculative positioning in benchmark futures. In fact, we're at this point the most net short speculators net of hedgers since the beginning of 2024. Now, when we had a similar build out, only a small blip lower followed on the S&P. So this is not a thing unto itself. But what it does illustrate is that as we get back up into the highs here, and the higher we go, the more it seems like market participants want to hedge their cash exposure to equities through futures. So ostensibly, we couldn't be at these highs if the market was not massively long cash equities. But increasingly, as you go higher, the markets are seeking to defend that position by becoming increasingly net short in the futures market. So you put all this together and you get the sense, well, the market is punishing disappointments disproportionately hard relative to rewarding things that are optimistic. We haven't really had these positive results from the Mag 7s move the needle. Where the needle has moved, it has moved for Fed reasons, it would seem, here. And Fed reasons appear to be static and out of juice. And so the question then seems to necessarily appear, are we at some sort of a sentiment extreme? Have we run out of good news to impress the markets? Is everything priced in? And in that sense, you might be looking at the NVIDIA earnings as a buy the rumor, sell the fact, or even just a wait for the rumor, sell the fact sort of a situation where the market gets on the other side of event risk and says, well, this doesn't change anything for us this way or that. It's time to perhaps divest a bit and let these markets have a respite. And so these NVIDIA earnings may be more an inflection point for a sentiment extreme than anything of substance for the AI story or certainly NVIDIA itself as such. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and what may follow. I'm also writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
What is going on, everybody, and welcome back to Risk of the Week. You're back with Gus and E. We got a couple risks of the week to put on, get caught up in all the craziness going on in the market over here. But before we do that, what's going on, everybody? Hope everybody's doing well. And Gus, how we feeling today?
Yeah, feeling good today. It was kind of a strange day. I mean, for me and for anybody in the market, we were down off open, and then we kind of gradually recovered through the rest of the day.
I know you got a couple solid earnings in there too that we're going to get
just think anytime we go red to green, it's a little bit strange, you know, or the other way. It's like, you know, we usually like to use open as a resistance, not a, you know.
I feel you on that.
It's interesting. So
I like that.
Anyway, yeah. So when I first opened my brokerage platform this morning, I thought it wasn't going to be a great day in the markets, and by the time it closed, I was up large. So feeling good.
I know your risk of the week is an interesting one. I'm curious to see what the audience is going to think about it. I like it. It's going pretty well so far too, but we'll get into that here in a little bit. Today is Tuesday. It's the beginning of the week. We have some more risks of the week that we want to put on. So we'll go ahead and just get into the slides for today and talk about some of these underlines because it's a little different.
Yeah, you guys are about to hear about my incredibly meticulously researched trade that I've been putting together for 2 weeks here. We can go slides.
Yeah.
Okay. Risk of the week. For those unfamiliar, every week on Tuesdays, Errol and I both put on one high-risk, ideally short-dated position. Sometimes they're not so short-dated, but ideally it would be short-dated position.
Yeah.
So let's dive right in. My risk of the week this week is Okta. This trade has pretty much already come to fruition. I was playing the earnings call after market closed today. And yes, I was being sarcastic with my comments earlier. I put no effort into finding this trade, and it has just worked. Okta... Okay, here's my due diligence for real.
Okay.
They've beaten earnings.
It's a real stock.
Yeah, they've beaten earnings like the last 6 earnings calls in a row. 6, I don't know if it was 6 or 7. A lot of earnings calls in a row.
Right.
But perfectly, every single one, it goes gap up, gap down, gap up, gap down. It's been alternating regardless of what the actual numbers are relative to EPS and revenue estimates. Mm-hmm. The last time they took a gap down, they're kind of close to their lows of the year. And so I just took a chance that this time it would be a gap back up. And that's what we've gotten. I forgot to put my trade itself on here. I have a bullish put spread wherein I have the 93.94, so I needed Okta over 94 by the end of the week. 3 DTE, which does fit the short-dated constraint that we usually try to put on these. And it looks like it's going to work out for him. I'm not sure if I'll exit tomorrow morning or exactly how I'm going to choose to play it, but there'll be a lot of theta that eats into those overnight now, so we'll see.
I feel like this is like the epitome of some trades. Like sometimes the risk reward is in your favor. You're placing yourself in an environment where we're about to see some volatility. And you pretty much 100% capitalize on it. I mean, I already saw the position. It's working out really well. And it's just funny, those last couple bullet points, perhaps the most brain dead trade ever, and then about 50 seconds of due diligence. I mean, if that's not a trader, I don't know what is.
No, but yeah.
Risk to reward was in the favor. It was a trade that made sense.
It was a trade that made sense. And I'm happy you bring up the risk to reward angle because that was another part of this is with the way that I structured this spread, I had to post up very little BP, slightly less than a 1-to-1 ratio of BP posted up to premium that I'm set to collect. That was a factor as well, is that it was it was a way to get cheaper exposure. My initial thought process was I was just going to grab the 94 calls and be naked because it's risk of the week after all.
Directional, maybe.
Yeah, directional. But those were like $500, and I managed to find a good spot where I was able to get in on this trade, which I posted on the follow page earlier today, by the way. Real fans saw this trade at the time I took it.
Yeah.
At the time I took this trade, it was, I think, $55 of BP for $60 of premium or something like that. Just a better way to get some more direct exposure. Took a few.
Love it. If anybody just joined us, Gus's risk of the week is OKTA today. It did have earnings and it popped to the upside. He had some long delta on, so it's working out pretty well so far.
Indeed. We'll hop over and look at a chart after we're done here. But first, we got to get into Errol's risk of the week. Tell us about it.
By no surprise. What's going on, Lone? What's going on, Emmett? What's going on, guys? By no surprise. We can go ahead and jump to the next slide. Drum roll, please. If we had a little, what's it called? The thing with the drum roll. Or whatever.
That just is a drum roll.
The noises.
Oh, like a soundboard?
It's like a soundboard. It's so
I've been saying I want the soundboard, but I can't be trusted with it. I would do too many stupid things.
Oh my gosh, you with the soundboard might be perfect.
You'd be like, I made 4% on this trade, and I'd be like, car crash noise.
All right. My risk of the week this week is going to be MNQ, the NASDAQ market. No surprise here, but I have a little bit of a short thesis that I wrote up for everybody just to give a little bit more of my 2 cents. Not that it matters, but this is what I'm looking for. So we got a couple primary levels. We got the 23,616 level, which is a price level we're almost trading at the close. And then we got 23,804. So there's a couple levels I'm going to be looking at for a potential short. 23,616, that one, maybe sometime tomorrow if we get a lot of I hate saying selling pressure, all that. We'll wrap back around to this trade if we take it. But tomorrow, for trading at around the 23,616 level like we are today, I will look for a potential short position. But there's that little yellow line like above that high, and I think that one says 26,650 it is. So my short bias for this first level is intact until we continue to trade above 23,650. A little bit of the justification for that is because there's a lot of thin volume above those price levels. So the logic behind that is if I'm getting short, I don't really want to be getting short to the upside if we keep pushing to those thin volume price levels, because then it's going to be a lot easier for price to rip through those thin volume, low volume node areas is what they're really called. So I'm going to be looking for a short until then. The way that I like to look at it is it's like, okay, I call it the IP, like the invalidation point. It's like, all right, where's the level when I'm trading directionally, especially with these futures so I can protect myself? Where's the level that I want to get out? Like, I don't even want to be in this trade. My trade thesis is invalidated, no ifs, ands, or buts, and that's like that 23,650 level. So in my eyes, if I can snag an entry at 23,000, let's say 620, that's what, 30 points of risk? And if you're using the micros, 30 points times 2, that's about $60 per contract of risk that you have on the trade. So I'm going to try and structure the risk management on that trade that way. But that 23,650, if we keep shooting beyond that point, I'm going to be looking to reposition and be a little bit patient for the second level. But clearly, you can just see my natural short bias. Like, I'm waiting for short opportunities instead of just getting long. And that's really shining through in my personality. It's like just waiting for the short opportunities, like rip to these levels so I can position to get to the downside.
Yeah,
we
man.
gotta rip there.
Stop doing that. Stop doing that. Just get long and wait.
Oh,
it's the greatest strategy in the world. I've been deploying it for years now.
Yeah,
just get long and
just
wait.
Get long, bro.
With shorting, I don't inherently think this is a bad trade at all. I think that this is a great TA and that you absolutely could catch this move for the record. But yeah, I mean, just with shorting as a whole, I've gravitated toward being so bullish in general and tending to be long delta in most situations, just because, again, brain dead logic here, but it's just true. Stocks want to go up. They want to go up a whole lot more than they want to go down holistically across the market. And you can't. A stock can only go to zero. It can theoretically rip upward to infinity. It can only come down to zero. So I don't know. Those have kind of been my two lines of logic as to being long a little bit more.
I mean, OKTA was beaten down a little bit.
Yeah,
it was kind of like a pot, not really like a pot.
I'm just consistently doing the opposite. I find that my most prominent strategy is just looking for sell-offs that I think are too big and unjustified, and trying to get in those spots and let the recovery happen. But yeah, I like this trade.
Risk of the week. We'll see how it pans out, and we'll circle back on Thursday and we'll give a little recap how these.
Yeah, we always mean to, and we kind of never do.
We'll circle back around to it if it was interesting enough.
Yeah, that's true. That's true. But anyway, that's what we got there. I'm seeing in chat, did anyone sign the petition to return Uncle Herschel the Cracker Barrel logo? I have not seen that petition, but if somebody could send that my way, I will happily sign it, because I am long Cracker Barrel, as we have established, and part of my TA in being long Cracker Barrel is that if they revert back to that old logo, I think this thing is going to fly. So yeah, please plug me in.
Imagine what a marketing scheme that would be.
Yeah, it's true. I mean,
back to the old logo. Like at that point, though, that could work and would make sense from a marketing standpoint.
Yeah, Trump had a very funny Truth Social post today regarding Cracker Barrel, just in his typical Trump speak, and he was encouraging them to revert to the old logo. But he did say one thing in there that I thought was very apt, which is that you have a multi-billion-dollar marketing opportunity here now. Now that you have made this blunder,
they have the attention.
Yeah, you have all the attention in the world on you, and you could play your cards right here to come out at even higher highs if you so choose. So yeah, but that Cracker Barrel trade, that's been working really well for me.
I'm just so curious. It's all hindsight, but I wonder if some of these marketing teams, like, this worked out way better than we expected in our favor, so let's see what we can do with it. Like, I wonder if that's the thing, like, get a reaction and then figure out how to maneuver that extra attention that you just got. Like, I wonder if that is a mindset they go into it with. Let's just see what reaction we could get and lean on our skills to see what we do with it.
Well, yeah, it's true. I certainly couldn't tell you the last time, if ever, that Cracker Barrel was discussed this heavily on the national stage. I mean, this has been amazing for brand awareness. I mean, like last Thursday when we covered Cracker Barrel, there were people in the chat that said, what's Cracker Barrel? I've never even heard of it before.
Right.
And that's because Cracker Barrel did something so heinous that we feel compelled to talk about it, and then suddenly their brand recognition goes through the roof, and that perpetuates, all across any social media that you look at, whatever. Everybody's talking about Cracker Barrel right now. So I think that they do have an opportunity, and like I thought that the sell-off was a bit too much for a logo change. I think that if they change the logo back, the recovery will be far too much, and then I will be looking to short Cracker Barrel after I take my 15x profits on these calls. It's an interesting situation, but also is it insider trading? If I sign a Cracker Barrel petition, like there's an ethical dilemma here.
There might be an ethical dilemma, but what does this petition look like? Is it like if we get X amount of signatures, do we have anything to? Let me see what we got.
Yeah, I don't know.
I'll let you know on that.
I don't even really know what that entails. But I mean, I guess if it got enough signatures, I mean, is Cracker Barrel? That's the thing. Is like inside Cracker Barrel right now, internally, are they gaslighting themselves into thinking that this was a good call somehow? I mean, I know that the CEO has said before that consumers prefer the new restaurants over the old restaurants, which does not seem to be the opinion that is widespread everywhere right now.
Yeah.
Are they delusional, or do they think that this is working?
I have a quick take on a little bit of that. I kind of think people care a little bit more now. I think it's a little bit of both. I think people care a little bit more. This should have gone with the Cracker Barrel segment, but I think people care a little bit more now because of the fact that people care. Like, oh, I used to go to Cracker. Now I'm upset. Yeah, actually, yeah. Even though I forgot Cracker Barrel was sitting down the road and I haven't been there in the last 5 years. I feel like there's a little bit of that element at play.
Well, certainly. I think everybody always wants to jump on hate bandwagons whenever they present themselves.
I agree. I think that's the human nature again in it.
Oh yeah, I mean, I think that in internet culture, and I mean, it's pervasive and kind of a problem that this happens often. It's like, who do we hate this week? Mm-hmm. And like often it means nothing.
Right.
And I will say too, and I don't know that this necessarily applies in the case of Cracker Barrel. If you're not, well, I should say. Okay, here's my statement. Here it comes, guys. The best thing you can do on the internet when you're the person that the internet hates for the week is nothing. You absolutely nothing.
Do you ever see people just shooting themselves in the foot? And you're like, what are you doing?
Yeah, no apology video.
What are you doing?
No tweet. Don't get in Twitter beef with anybody. Do nothing and wait until the next people are hated, because it will always turn over. I mean, Mr. Beast did that. I don't even remember what the thing was, but I remember there was like a cancel Mr. Beast push.
Whatever he did, success, you forgot what it was.
Yeah, exactly. I don't remember what it was. I never really looked into it too much in the first place because I don't really. Yeah. I try not to spend too much of my life worrying about people's lives that will never know I exist. But but like it was perfectly handled. He never ever touched it, and then the internet just moved on to hating the next person the next week. Yeah. I think the same thing is liable to happen with Sydney Sweeney in her situation. So. Yeah, just across the board, the best thing that you can do is nothing. I don't know if that necessarily applies in the case of Cracker Barrel, because, like I said, and then this is why I tripped up at the beginning. If Cracker Barrel is not going to change this logo back, they should do nothing. The only reason they should do something is if it is to say we are changing the logo back. But yeah, I don't think Cracker Barrel should be trying to get crafty or apologize for this or whatever. I mean, you just got to own it and move forward if that's what they're going to do. So we'll see. Yeah. But yeah, I got Cracker Barrel like almost perfectly to the cent at the bottom here. I was like mid 50s was my buy.
Yeah. What was that ticker for Cracker Barrel again?
CRBL.
CRBL. That's what it is.
I have the chart up over here. But yeah, I have what do I even have? I have a naked 70 call. It's 143 DTE. Then I also took this bullish put spread, which expires in December, 115 DTE. Just needed above 55 by that time. But yeah, that's what I'm looking at. This I believe these cost me like 60 or something. I 5 or 6x'd on these calls by now. And then this is going swimmingly as well. It's beautiful. In the age of instant information and 24-hour news cycle, it just is becoming increasingly common.
24-hour news cycle is crazy. We get 24-hour news cycle though, for real.
Yeah, it's true, and it's just in that age and in this age of social media and where people just love to jump on these bandwagons. I just often think that these sell-offs and these run-ups become too parabolic. People care a little bit too much.
What was the? What were we mad at? What were we mad at M&M's again about? Guys, what were we mad about? No, for real though. What were we mad about M&M's? Do you know?
M&M's?
Or let us know, chat. Yeah, Grumpy Mike brought up M&M's. I was like, oh, was there a little commotion about M&M's that they did a while ago? before I paid too much attention to the marketing
I
that
don't
these
know.
big companies are
That
doing.
green M&M in the commercials was hot. They took her out.
Green? I'm colorblind, so I've never seen a green one.
Oh, you know, it's the hot female M&M, man.
Oh, that one.
Yeah. She was a baddie, but they took her out.
I think I know exactly what you're talking about, though. Actually, yeah.
Yeah.
Those are, yeah.
Sally from Cars is kind of a baddie too.
I could have swore that
We're throwing
Eminem's
out
name was Sally.
non-human
too.
baddies.
I could have swore that Eminem's the female
green-
Eminem
green
was her name was Sally. I think.
Is this going to yield
I could have swore unless Sally is just like one of those names that
Green
we
M&M
use right off
character name?
right off the bat.
Miss Green.
Miss Green, of course.
They're really
Miss Green
they're
was
really
my
creative.
Miss Green was my 6th grade teacher's language art.
Here we're talking
English
M&Ms.
teacher, Miss Green. Shout out to Miss Green.
Let's pull up Hershey while we're talking M&Ms,
yeah.
man. What are they doing? Whole bunch of
Miss
nothing.
Green was the best English teacher.
Miss Green was the best English teacher.
She was. No one with a brain hates Sydney Sweeney. Yeah, I almost already feel like the whole hype is already, or the buzz is cooling a little bit.
Yeah, did they ever come back down? I guess not. No, the move happened and we've kept it.
Yeah. I mean, like, the buzz online is kind of cooling a little bit. Like, I wonder what's going to be next. I don't think there's anything in the headlines that surprised us this week yet.
We are mad at M&M's because they used red dye number 5, which is a no-no for some reason.
Oh, that's valid. That sounds bad. Red dye sound bad.
I'm an artificial coloring hater, I guess.
I mean, is it good for you?
I try to avoid them where I can.
Is it good for you? Is red dye good?
I mean, like, that's the thing is, like, with a lot of this stuff, food dyes, sucralose, aspartame, you name it. It's like, I think at most it's zero sum.
Yeah.
and at worst it's, way worse or a little bit worse. I guess at worst it's way worse. But yeah, I mean, I think at most of these things are zero sum. I try to stick to what grows from the ground or has a mother.
Well, whoever is running the red dye companies, I know they're mad right now.
Yes.
In lobbying.
The food dye companies are getting killed, and can somebody tell me the ticker of that giant high fructose corn syrup manufacturer? If anybody knows that offhand, I know there's a high fructose corn syrup manufacturer that's getting hit. Of course it's not good.
Thanks for the confirmation there, Lone.
Yeah, we appreciate that. Of course it's not good. That's such a good response. I mean, they make, I don't know which red it is, maybe Red 40. They make one of them from beetles. Mm-hmm. That's how they do it. I remember, here, I'll go on a soapbox. This is not market related at all, and I'll keep it short. When I was young, I tried to tell my friends, like, this is like 2nd, 3rd grade, and I tried to tell my friends that gelatin is made with horse hooves, like, because it is.
Why you gonna come up on this live and tell that to all of us? None of us are eating gelatin.
It's an empirical fact. They put ground up horse hooves in there. They have forever. It's how you make gelatin. It's not Jell-O the brand. It's what goes into gelatin. Right. And I tried to tell my friends that, and they clowned me. The whole lunch table laughed at me.
Good.
One of my friends was like, "This guy said Jell-O's made with horse hooves." Will Hummel, I remember that.
Will.
And
Will.
but he the whole table like clowned me for it, and I was like, "No, guys, like I'm telling you the truth."
Yeah.
And this is 2nd grade. We don't just like have phones like these kids these days. We could just whip something out and Google it.
Right. Fact check.
But yeah, I was so right. And so I'm vindicated in my adult life now, knowing that I'm right. And I hope that everybody at that table at some different point stumbles across the fact that it's made out of horse hooves, and they're like, "Damn, he tried to tell us."
I'm a fact set right over to Will. But just wow, that was when the public laughter got the confirmation on what was true before we could fact check.
Yeah.
With our devices. A little bit of off bar growing up, my Dorita and Terrell, my brother and sister, they thought I was, or just didn't know my colors growing up as a kid. So blue and purple was like the first one where they were like, "Yo, you just called that blue, you just called that purple. Ha 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 ha. Errol doesn't know his colors. Little do I know, I'm colorblind." I find out in middle school I'm actually colorblind as to why I didn't know my colors and I got mixed up with them.
Yeah, it's always hard to kind of figure those things out in early childhood.
It was one of those things too. Well, I remember I had went to my mom and I had said, I don't know if anybody has done those colorblind tests where you can see the dots.
The numbers.
Some of those are for real. Like a lot of those, I can't see what's in those, even if you can. And I had went home and I told my mom, I was like, "Yo, I actually did a colorblind test. Like, it's pretty consistent. Like 90. Like I actually am colorblind. Like I knew it." And she was like, "Honey, I know." I'm like, "What do you mean you know? You never told me?" So I guess they already had signs from when I was little about being colorblind.
Yeah,
they just never told me, so I don't go around like I'm colorblind and I have a disability.
Maybe they didn't want you. They didn't want it to limit you. Maybe
exactly.
Yeah,
I think that's what it was.
Yeah. I know that's a thing experience that people with dyslexia will share a lot too. Is that like when you're in kindergarten, everybody's just like, "Oh, like this kid can't read. Like why is he so behind on reading?" And then at some point, you're like able to actually articulate like, "No, that doesn't look like an M. It looks like a W."
Right.
And sleep, and then you
W's in the chat.
W's in the chat. M's in the chat.
It looks like a W.
W's in the shot. Anita Maxween. You guys don't know about that.
No.
What's up, Luis? Good to see you. Hope you enjoyed your time with Tom.
Yeah, Luis, what's going on, brother?
Looks like it was a blast. Allergies were a recognized thing back then. That's true. The allergies. I will say this. All right, I'm not one of these. Oh, all these kids got autism these days. What's going on, people? Okay, that's diagnosis bias. We weren't looking for it, and now we are, and we're spotting it at higher clips. I understand that. These allergies, though, man, how is every kid in the world allergic to peanuts now?
Yeah.
I don't understand.
Yeah, like grow up allergic to peanut butter.
I'm saying they're fugazi.
Is that a thing though?
But like,
I thought that allergy was started to slowly go away. I haven't been around a lot of kids.
I don't know if it's starting to go away. I think someone will figure out a vaccination or something, right?
Something.
Like, surely we can do this. Is it
by this
just not
point.
high on the medical tier list? I don't know. But yeah, somebody tell me in chat if there was a bunch of kids with food allergies when you were a kid in school, because I know that when I was a kid in school there were certainly the peanut-free table in the lunchroom, and it'd be full. I mean,
but rightfully so. Yeah.
Microplastics in your blood? Where did that even come from? This is some unnamed person.
It's on you. Lobbying. We got the lobbying.
What the heck is that?
That's funny.
Oh, when it says natural flavors on the label, the juice or drink generally has beaver sat. Like, you talking like cojones, like beaver cojones? I think. Okay, look, I don't want to do the horse hooves thing to other people, but I think you just made that up. I think you just made that up, Devin. What is that? How are you guys?
Have you ever seen those comments where it's a long comment and then the last 3 words is like, and I just made all this up?
Yes. Yeah, I see that all the time.
Like, yeah,
and I don't know what I'm talking about. I'm spreading
I just
misinformation. Yeah, I'll have this happen to me all the time.
Setting up NVIDIA. Let's touch on that before we wrap for the day.
Yeah, NVIDIA. What's not to say about NVIDIA? Can somebody enlighten me to what the hell happened on this candle on the left? I don't recall what could have given NVIDIA this price action.
So we have earnings after the bell for NVIDIA. So what is that, Luis? August 27th after the bell. You're not looking at any NVIDIA earnings, are you? I'll look at the options chain.
I probably won't. That's one, like these Mag 7 super high profile earnings, like that's one that I'll be looking to play at open the next day in the other direction after the move. Like, because I think that just with NVIDIA, whatever we wind up trying to price in is going to get overly priced in, and there will probably be some kind of snapback to averages, whatever that even may entail. So yeah, I'm looking forward to it and seeing how this moves the market and the implications, but I don't think that I'm going to personally make a play.
Yeah. AKA don't know, don't care. I'm in the same boat. But Luis, I'm not going to be trading earnings for NVIDIA, but I'll take a look at it once it drops. And then maybe if it's a little bit of an overreaction to one side, then maybe we take a look at it.
No, swear, look it up. I couldn't believe it. Okay, Devin, I'm going to Google this right now, live on air. Natural flavors and beavers. It auto-filled. Natural flavors may contain castorium, a yellowish, waxy substance secreted by the castor sacs of beavers.
So it's true.
Vanilla extract especially, apparently, but also raspberry and strawberry. It is recognized as safe by the FDA. Okay. I horse-hooved somebody. I eat my words, Devin. You are correct. What the hell? What?
I horse-hooved somebody. I horse-hooved somebody. Literally right after.
I've passed my trauma on out into the world.
Hey, yo.
Literally right after.
Literally, that's how it happens.
Nobody believed me about this crazy food fact, and I was like, shut the hell up. That's not true.
Literally.
Oh man, they're poisoning us. I think that might be part of the calculus here. Oh, that's hilarious.
Bob Sala got a short call spread on in NVIDIA, feeling a little bearish this week.
I think that that's a reasonable take. But anytime something is, extended this far upward and running, it feels like it's going to be hard for their earnings to kind of keep up with that.
Right.
You see those little breathing phases a lot. We just got it with Palantir, and it doesn't mean anything. It doesn't have any broader implications. But yeah, I mean, if you put a gun to my head, I might have to get short.
Yeah.
Just because, like,
that takes a lot for you to get short.
It does.
Right.
You know how much it does. It's just, I don't know. NVIDIA, it's like. NVIDIA's like LeBron. Everybody's going to talk about LeBron. Everybody's going to play LeBron in their fantasy lineup, but
because it makes sense.
Somebody's got to fade.
It makes
LeBron.
sense.
LeBron has bad games,
right? I'm not stepping in front of that train.
occasion.
Yeah.
Yeah.
On occasion.
No, I don't have to physically step in front of him. If I had to physically,
Well, it's like that pun fit the reality, and
if I had to play big bank, take little bank with Nvidia, I
Right.
probably would keep my wallet in my pocket.
Yeah. I'm not taking the charge. I'm not taking the charge on Nvidia. I'm not stepping in the lane. I'm not doing it. Anything else to add on before we start to wrap for the day?
Nothing else. Excited to see how these Nvidia earnings move the market. Bob with the 190, 195 bear spread. Okay, that's an interesting one. I like it. Yeah, giving yourself a little bit of breathing room there too. So that's good.
We got OKTA, and then we have NASDAQ for risk of the week. We will be back Thursday to touch on how we're managing these positions and what's going on with them. We'll see how NVIDIA performs after the bell this Wednesday. Thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
Good morning, everybody. Welcome to Trade Live with IG. Welcome to my crib. Indeed, yes, coming to you from London, and Piers just getting his phone fixed. There's Piers' thumb. Good morning, sir. How are you?
Yeah, hello. Sorry to everyone this morning. Having some technical difficulties, so I had to do this from the phone. But it's all about the content. I hope everyone can hear me.
It's because you tried to be a wide boy and you only joined at 7:27. That's why, isn't it? Be honest.
That's got a lot to do with it, yeah.
So everybody,
I'm also getting coffee out of my keyboard as well, which is good news. And I absolutely cannot stop doing that, because if I don't do that, I'm not going to be able to. Anyway, carry on.
Did you just spill a cup of coffee over your keyboard? Great. Yeah. So everybody, let's see how brave the studio are this morning. We've got Terence and Dom. Who is on the sound effects? We're about to find out. We've got Angeline off for a week.
Oh, are we meant to be cheering about that?
No round of applause. No round of applause from the boys. Let's try that again. We've got Angeline off for a whole week.
Yay!
That's right. When the cat is away, what happens, Piers?
We all know what happens, Richard.
So that's right. Where our first competition in the morning is going to be, where do we think Angeline's gone on holiday? I heard a rumor it's her birthday. Is that right?
Is that true? I don't know.
Yeah, I think it's birthday. So it's not like anything happened on Friday that we've got to talk about. So we've got some review of Jackson Hole coming up. We've got, of course, since our tech expert, we're going to be talking about NVIDIA as well. But what is coming up on today's show? Well, you got me and Piersy through till 8:35, at which point I'm going to be joined by Julian Wheeler in Expert Edge. We're going to have a chat about what is going on in these markets at the moment. And then we're going to open the all sessions for you. How are stocks going to react? Of course, we had yesterday open in the US, so we've got that to go over. A little bit lower volume, of course, because the Brits run everything across there, and we're all on the beach. And then at 9:10, we've got Trade of the Week from Axel. Right, Piers, how's your coffee doing?
Yeah, I think it's okay. It's still working, but I mean, I'm just for the viewers out there, if my Bloomberg keyboard starts not working at home, then I have some problems for the day, to say the least.
Right, let's go into some overnight action. Right, good morning to everybody online then. We've got Friar Tuck, Parquet 1977's in there, Jugger's in there. Good morning, Boise. Good morning, Ida Rock, Wing It. Andrew McKelvey, how was everybody's bank holiday? Did anybody try and tune in yesterday expecting me to be working? That'd be very unlikely. I think you know me better than that already, everyone. So, Piersy, how was your bank holiday?
I don't get bank holidays, mate. I do the US market, so a completely normal day for me, albeit just a bit quieter in the communication with clients department. But it was just a normal day in markets yesterday for me.
And now take us around your crib there. That's a beautiful setup you've got.
Yeah, this is just my home my home rig. Why don't we show everyone at home? This is the engine room.
There.
And I do this. And this morning's been a little bit of a kerfuffle because I was trying to get this this live feed on my computer, which didn't happen, and then I spilled coffee on my keyboard. But I'm ready to talk about stocks when as 24/7, as you well know.
I didn't know that posh Australians used the word kerfuffle.
Yeah, I know. I just thought I'd throw that in there. It's absolutely ridiculous.
Right. So, well, let's start with Friday. What
Yeah.
was your thoughts on
Yeah.
on Jerome's speech and the market reaction?
Well, listen. First and foremost, I just want to say that the market, and including me, was gearing up for him to do what I thought that he was going to do. I mean, he always speaks very well and usually massages it quite nicely. But given the fact that what's going on with him, and to be fair to him, he's the polar opposite of Trump. So he's not emotional about it, and there's no tit for tat. And I did think that he was going to use that PPI print and perhaps some other sort of bits of data to try and just throw a very small bit of cold water on this rate cut narrative, which was gathering a lot of steam. And quite frankly, he did not do that at all. In fact, he did the opposite to that to a degree. I mean, if the scale of hawkish and dovish is here, I thought he was going to be kind of in the middle, and the market was here. If this was on the more dovish side, and he basically just delivered for the market in a big way. And he gave them the dovish narrative. I mean, there are still open questions as to whether he's obviously opened the door. He's done the pivot. He said we're changing our policy stance. We're going to cut rates. And the market loved it. But bearing in mind, you look at the price action. It's all very algos, right? Everyone's just reversing the move that they'd anticipated. So it was just a big algo-driven jump. And then, and let's use Palantir as our example, amongst the other AI trades. So, I mean, what's really interesting here is that the small caps have outperformed the NASDAQ for the last month, right? As has China, as has the emerging markets. And there's been a rotation going on for a little bit now. I mean, look at the Russell index. It's been trending higher, and it's outperformed, as I just mentioned, the NASDAQ over the last month. And then, of course, fuel was put on that fire with the rate cut narrative. So that's now, so the small caps are now very much in focus, and then other parts of the market as well acted quite well. But if you look at the AI trade, it's kind of been faded, right? Nvidia was down 2% before the Fed, before Jackson Hole. It rallied up to 4.5% and closed only up 1.5%. So that
they definitely faded the NASDAQ, didn't they? That was clear from about 3:30 p.m. onwards, 4 p.m. onwards.
Yeah, and which is new, right? It's been a while since we've seen the NASDAQ being faded, and the same thing happened yesterday. Nvidia opened the day down Palantir was down 5.9% yesterday on the open, right? And it was aggressive selling, and then of course the usual knee-jerk standard U.S. market day where, whether it be humans or algos, the volatility, the vol subsides, and then it kind of grinds higher and grinds higher. But yesterday, instead of it grinding higher and then going green as it normally does and closing on the highs, it sold off into the close again. So that's new, and I expect it to continue. But then again, we all brace for tomorrow night, right? We've got Nvidia tomorrow night, which is going to be it's going to be really interesting.
Now come on, we've got 30 minutes to fill here, Piers. Don't jump ahead into all the exciting stuff straight away.
Yeah. Okay. Cool. So just to finish off on the Fed, and I think the most important point that anyone can make about markets right now is that there is a rotation going on. It's been going on for a while. I think it's now been validated by the Fed, and I think that it's going to continue. So I'm leaning into, in everything that I'm talking about in my world, leaning into the small caps and the more value and beaten up areas of the market, and fading these exuberant, expensive, crowded tech trades, AI trades to be specific. The reason why I mentioned Nvidia in the same breath is because that could be temporarily derailed tomorrow night, one way or another. We'll see. But the macro and the Fed is a kind of, and we've also got CPI we've also got some core PCE on Friday, right, this week. So that's going to be interesting. Those numbers are very, very unlikely to surprise any. Because 90% of that 90% of that number is already pretty much known because of the composition of it from CPI and PPI. So the we're not going to have a PPI moment where suddenly there's a hot print or like a super hot print. So I think it's probably more likely that the print's in line or maybe even soft on Friday, given the nature of what it is. So I don't think that's a big risk this week. But so the overall macro rate cut scenario and rotation to me seems to be in motion.
Now, what's the danger of getting caught on the wrong side of that rotation? If you act the same way as you've been acting for the past 3 months, let's say, right, and you're chasing the stocks that have been the winners for that 3 months, there is a chance for disappointment, isn't there?
Yeah, exactly. I mean, and it's happening. It's happening throughout the market, kind of one by one. I mean, if you look at again in Europe this morning, Commerzbank, which has just been crowded into month after month after month, and it looks like a tech stock into the 1999. Look at Commerzbank, and Bank of America came out this morning and downgraded it to a sell, which is quite a rare occurrence.
Wow.
And basically just said, enough is enough. This stock's, and quite frankly, I could not agree more. And there's been a lot of that going on in Europe, quite frankly. Commerzbank's probably one of the poster childs. Obviously, Germany with the fiscal package has been the center of this attraction. But going back to your point, there is risk at this juncture. There's so much crowding and so much positivity into these names. And it doesn't matter whether it's Nvidia or Commerzbank, right? It's the same thing. It's the same bit, too much money chasing too few stocks up in a straight line. And you get to a point, it's hard to pick that point, but you do get to a point when it's kind of, enough is enough. And there's time for some pause and some reflection and take a deep breath. I feel like we're at that moment now. We'll see.
It makes some other stocks very interesting, doesn't it? So we see the Commerzbank on screen there. That's exactly what you've been talking about. But I'm quite interested in the S&P equal weight at the moment. Yeah. I'm not sure I can bring myself to buy the Russell. There's a lot of crap in there, isn't there?
Yeah, it is. I agree with that. Although worth noting that and also, do you know the one other thing that bothers me about the Russell is that although I do think it's going to go higher, I think it's going to get the IWM, which is the ETF. I think it will get to 240. But I hate situations, as you well know, when everyone's saying the same thing, and I hate being one of the people doing that. But it's so obvious, this trade, that it's almost too obvious. And like since that, so obviously it's been trading well for a while, but since the we've had 48 hours of trading essentially.
Oh, it's Jay now, is it? Your best buddy,
Jay Powell. Since his speech, I mean, everyone has come out and said that they want to be long small caps, right? Yesterday there was what was it, UBS and Bank of America. Anyway, it's just endless. All I see is just constant, upgrading of small caps. That bothers me a little bit. It doesn't mean it's not going to work, but it does bother me a little bit. And you're right, it is full of a lot of crap. So if you don't want to get involved in that, there's plenty of other things to be involved in. I think you can still be long Hong Kong. You can still be long a lot of these other names in the value space that have been performing for quite some time. The likes of, I mean, even if you look at the likes of Estee Lauder and Nike, right? These names we've been talking about for a long time. These still fit in the basket of unloved sort of stocks, which still continue to sort of just bubble along under the surface. But it's a tricky market right now, right? I mean, and it's always a tricky market, to be honest with you. But just given how far we've moved, I mean, even the unloved stuff, there's a very strong argument for the entire market having a sell-off.
Yeah.
Right? So I think you have to be wary. The book that I'm running, the dummy portfolio for clients, I'm very much max long, but it's very safe stuff. So it's Google, it's ASML, it's IBM, it's Intel. I don't have a single long in a spicy situation at all. In fact, I'm short Palantir. So I've got to be. I think, but also there's a hedge there, and I'm ready to get out of this stuff at a moment's notice.
Which I think a lot of people are, aren't they? They know there's risks, and one of the risks is on the front page of the Financial Times this morning. And it's funny. I was just reading it when you sent out your morning email. So let's have a look at the FT here and the worry this morning that Trump has fired the Fed Governor Lisa Cook. the ramifications of this potentially are pretty big on Fed independence, aren't they?
Yeah, I mean, I just think there's so many things almost on a daily basis that people are just scrambling to get their head around in terms of the implications for the independence, not just of the Fed, but of the entire system, right? I mean, we're seeing what's going on with Intel, and Trump yesterday saying, and I quote, "I would like to do as many of these deals as possible." So everyone's kind of scratching their heads, and this Lisa Cook thing is, I mean, technically speaking, he is allowed legally allowed to fire a Fed governor for cause, but then the cause part is, I mean, it's a pretty serious accusation that he's making. So, I mean, we're going to be in a legal fight no matter which way you slice it for quite some time. There won't be any outcomes, and in the meantime, there's just going to be a lot of uncertainty over how this plays out. If she, I mean, and again, it's a black and white thing. She either broke the law and therefore what he's doing is legal, or she didn't, and this is absurd.
It's personally, I must admit, I don't really care about her situation. What I care about is what it's obvious Trump is trying to do here. So there's a big importance to her seat, and that is that if he can get rid of her and appoint one of his own people, then that gives them a 4-3 balance, i.e. a majority of Fed appointed governors from Trump. And therefore, the theory is that then he has control of the Fed. And he needs control by February, because in February, then the other 12 local district governors are up for reappointment. And therefore, if he has a way to influence their appointment, then, by the time Powell's gone, then he controls the Fed. And that's the pseudo end of Fed independence. Will the bond market start to be overly concerned about that this week? Because it's certainly enough of an excuse for those vigilantes to come in. Let's see if we can zoom in there and see where that 30 years trading, because it's back at 493. Forget your rate cuts, forget your dovish. Up to the US, please, producer Phil. So there we go. That 4.925 is where the US 30 year. Watch that long end this week, because it could well gather momentum that Fed independence is really in question. What do you think, Piers?
Yeah, I think that's right. I mean, I'm not quite sure whether the long end is acting like that because of this, but it's hard to tell. But I think that the long end has been, it's a very strange battle going on at the long end, quite frankly, because if you talk to people, the smart money of the fixed income world, they all say the same thing, which is, from what I can see, which is that they're concerned about inflation, and they think it's going to rear its head again, and that's the argument. That's why we're seeing the price action that we're seeing at the long end. But
I guess the two are tied, aren't they? Because Trump's saying he will take rates down to 2%. Yeah. So that's where the inflation.
Which I suppose, that's absolutely correct. By definition, if you think about it, those two things are completely aligned with each other. So there's some interesting stuff going. But then again, but at every auction though, they turn up and they just lift it. So yeah, it's difficult to tell what's really going on at the long end, as is often the case, because it's a bit of a funny old game. But nonetheless, it's just a bit weird. I mean, again, it's the thing with Trump that's just so extraordinary is that he does these things that everyone goes, hang on, are you even allowed to do that? Is that legal? What's going on here? And then it kind of, because the nature of it's so grey that it's kind of just like no one really knows anyway, and then you just sort of gloss over it and we move on. So I don't really know what to say, quite frankly. I mean, all I know is it's just very bizarre, and this is not going to be something that's fixed in the next 24 hours. This is going to take months of legal battles and be very noisy and annoying.
He is the president of unprecedents, because everything he does seems to be unprecedented at the moment. So the other story in the Financial Times this morning is about that Intel stake, right? Yes. And producer Phil is going to get that up shortly. We've got, see how quick he is on this Financial Times this morning. Can't find, well, so if you show the front page of the FT again, Phil, It's that big story right in the middle. And yeah, what do we think here? Nope, that's not the one. Go back to the front page of the FT, please, produce Phil. And then right in the, let's see, there's a story about what he's doing, the question around capitalism. What is Trump doing with regards to building these stakes in companies? And how concerning is that, Piers, around what we've got going on? Because he's, as you said, he wants to do it with more and more, doesn't he?
Listen, I've got mixed feelings about this. Number one is the Financial Times are an aggressive left-wing media outsource who hate Trump, so I wouldn't necessarily listen to the thing they've got to say. Number two is, and they often regurgitate. I quite frankly, you know, the Financial Times reporting is frustrating at the best of times. But nonetheless, I just think that it's. Listen, you can't you have to be careful coming out and saying immediately that Trump is moving towards being China here, right? Let's just call it what it is, right? This is the concern, right? What the hell is going on? Are we becoming China? Are we becoming, you know, are we becoming France? Are we becoming, you know, this is the state control setting a precedent?
I don't think you have to label it like that.
Well, that's what's being done on national television by smart people, right?
No, I'm saying you don't have to say it's a China or a France or Cuba, right? What you can say is that he is using state funds to take stakes in US companies, which has never happened before unless the company is in severe distress, right? It happened with the airlines in COVID. It happened obviously with a lot of companies in 2008. Not the home builders, was it AIG?
Oh yeah, okay.
Insurance. But using, I mean, it's just not done. It's meant to be lower government representation in corporate US capitalism, isn't it? It's not meant to be more.
Yeah, I agree. And you know what? Listen, what's fascinating about all this is that Trump is completely and utterly rewriting the rule book for what the conservatives traditionally meant to be doing. And if you think about it, he's actually doing what the Democrats set out to do, but in a completely off-piste fashion. And
Bernie Sanders.
Well, literally, he is everything he's doing is for the American taxpayer and for the working man. I mean, not everything he's doing. So much of it is tailored towards that. And you know, again, there's a touch of genius to everything. Do I like the feel of it? I don't know, not really. Right? But the fact that he's good. Let's just take Intel, right? Our case study. He is the CHIPS Act money, which was going to go to them anyway, which was just a blank check paid for by the taxpayer down the drain or given to Intel, right? That was what Biden planned on doing. Trump is trying to think like a businessman, as he always does. He said, listen, I don't want to have control of the company. I don't want to have a say in the company. So these are non-voting shares. But what I do want to do is I want to.
And they're not non-voting. He's promised to vote with the board. They're not non-voting. It's ordinary common equity. No, 100%, Piers.
Is it?
It's voting shares, but they've promised to vote with the board.
Okay, well, that's news to me. So I heard that everything I've read is that they're non-voting shares. They have no ability
absolutely
to vote.
Not. They're normal common equity. There's no difference from any other shareholder.
Okay, all right. I'm gonna anyway. We'll move on from that.
Go on, you fact check me.
Well, I'm going to because this is like the epicenter of my world, and that's news to me that they have any voting capabilities in Intel whatsoever. Yeah, well, we need to get to the bottom of this, which is a relatively important point. But the statement from the White House is that we have no interest whatsoever in being part of the running of this company, and they made that very, very, very clear. So, if that's the case, if that changes, and they do try and get involved in the running of the company, that's obviously, in my view, a very dangerous line that's been crossed.
But it's not just getting involved in the company. It's are contracts going to go to them and not to others because the government owns a stake? That's not capitalism. That's not free markets.
Absolutely correct, and that's what has to be seen here. Whether this is just a passive thing whereby he's trying to create shareholder wealth for the American taxpayer, or whether he's trying to meddle in the operations of Intel. Now, that's two separate things, right? One of them is a very passive thing that you can maybe justify, and the other one is a very dangerous line that's being crossed, and the precedent that's being set that none of us, I don't think, will be comfortable with.
But there's an incredible number of lines that are being crossed, though, right? He's tried to get involved with the media. He's trying to get involved with investment banks, telling Goldman's to sack their economists. Anybody who speaks out against him, the fake news, is either getting sued or he tries to sack them. The Bureau of Labor Statistics give us a bad jobs number, you're sacked. Jay Powell, don't cut interest rates, you're sacked. You know, this is, there's no question whether he's meddling and whether he's operating like a mafia man.
Yeah, no, I agree, mate. I agree. I mean, there have lines. I mean, with regard to Jay Powell, I could not possibly agree with your point anymore. I find it deeply concerning, but the biggest thing I hate about that is that he's wrong, right? He was wrong in his first presidency, and he's wrong now. Trying to compare the U.S. economy to the European economy to the rate structure. If you want their rate structure, you take their economy, mate. If you don't want their economy, which you obviously don't, because you're bragging about how good yours is, then shut up about their rate structure, because otherwise you don't have a clue about macroeconomics. Which he obviously doesn't, but that if you ask me to boil down what I find most frustrating about Donald Trump, it's this particular subject, because he banged on it about the first time, and quite frankly, because it's the most important subject of all the subjects, right? Interest rates and the Fed and their independence, and his meddling in that pisses me off no end, and that's completely wrong. I couldn't agree more. As for taking a passive stake in Intel, I don't know yet what I think about that, quite frankly. It doesn't make me feel very comfortable, but yeah, we'll see. I mean,
because he's done it with US Steel already, hasn't he?
Yeah, he got with the Japanese deal. Yeah.
Yeah. So it's who's next? Why can't he take a 5% stake in Palantir? Because Palantir comes from government contracts. Therefore, he deserves to own 5% of it, doesn't he?
I agree. It's I think that, and Palantir actually, out of all the companies that could be on this potential list of his, probably makes the most sense given how much he's in bed with them anyway.
I do wonder if that's one of the reasons that suddenly it started to sell off.
Well, maybe. Who knows why Palantir is doing? Yeah, maybe.
It's certainly not a 0% risk, is it? Anyway, no. Right, that was our quick and nasty on Trump trying to take over the US corporate structure, company by company. But we are going to guess the chart. So what country are we in today, Producer Phil? It's a US stock, Piers. Let's see if you can guess this one before anybody on the chart. Let's go to guess the chart.
Stepped on the floor with the chart in mind. Saw that graph and it looked divine. Spiking high with a disco strut. But is it real or just a little bluff? Neon lines and a price so bold, moving like the stories Wall Street told. I've got my mouse and a disco heart, feeling brave enough to guess that chart. Guess the chart under the lights. Is it breaking out or faking heights? Could be silver, could be soy, could be junk bonds just like a playboy. Guess the chart, I feel the beat. RSI dancing at my feet. No idea where this will start, but I'm staying alive to guess that chart. shade. Richest dress in every trade. Angeline's got the disco stare. She gets golden flipped midair. Everyone's guessing, everyone's wrong. But the party don't stop if the vibe is strong. It's not the profits, it's the art. We're all just here to guess that chart. Guess that chart, spin the wheel.
Welcome back, everybody. So we are just before the London Stock Exchange opening bell. But what was that chart? Did anybody get it? It's Viva. Wow. That is impressive from him. That is very impressive. Viva, do you know them, Piers?
Yeah, I do. They make this software as a service for the medical industry. It's there. It's a very yeah. I do know them. Yes. Oh, was that Vive?
Right. We are going into the opening bell. So there it is. Ring a ding ding. Here we go. What is happening on London after the bank holiday? If everybody enjoyed the bank holiday, what are we seeing? Well, it looks like, oh, wow, Kingfisher is getting slammed. I'm not sure. I haven't seen anything there this morning. But first of all, Travis Perkins up. Small higher. Then we've got Weatherspoons. That's quite a wide spread there, though. BP up 1%. Rio's up 80 basis points. Imperial Brands up the same. So there's a few people going for defensives there. BAE Systems winning up 80 bips as well. And then on the losers, yeah, we've got Kingfisher down 4%. Let me just see if there is a news story there. No, I don't see one. Why? Let's see if anybody knows why Kingfisher is down 4%. Right, then we've got ABF, owner of Primark, down 2.8. We got Rank Group down 2.5. There's quite a few losers here, isn't there? What is going on? British American Tobacco now down 2.7%. What is going on?
Mate, the market's opened weak. There's a whole bunch of things going on.
I'm guessing Bats has had a downgrade or something. And IHG, Intercontinental Hotels, down 2. Whitbread down 1.6. The Pru, Diageo down 1. I thought the FTSE was looking unchanged on the open. What is going on here? Let me just check the FTSE futures. Has somebody put a... Yeah, FTSE down 50 basis points, getting clumped. But there's some very, very strange moves. I do not see why defensive stocks would be getting hit. Kingfisher Cup, there we go. Thank you very much, Supersonic. Good man for that. So that's why Kingfisher down 4.5%. Why are Bats down 2.5%? I mean, they have had a great run. They've rallied from £37 to 42, so that's understandable. But you do have a lot of weakness. Also, Prudential down 1.5%. Marks and Spencer's down 1.5%. Barclays down 1.3%. IHG. I mean, I guess this is what happens when the FTSE has such a big run and is outperforming the S&P 500 for the year. Then we do get a bit more volatility, and you're seeing these stocks come off. So, right, Piers, before we go back to chatting US, let's have a quick look in Europe as well. What are we seeing in Europe? Well, we're seeing BNP Paribas down 4.7%, Air France down 2%, Puma. Piers, did you wear Puma, Adidas, or Nikes?
I'm an Adidas guy.
You're more of a Gucci loafer man.
Not anymore, mate. That's back when I was a tryhard. I'm talking about. I wear Adidas, mate. I'm an Adidas guy.
Right.
Did you see what happened yesterday with the Pinot family looking to buy a stake in looking to buy Puma?
Oh, go on.
So obviously they own the majority stake in Artemis, and via that investment vehicle, they want to buy Puma, apparently.
Right. I guess that must have had a big day yesterday then, did it?
Didn't even look at it, actually, the Puma. I didn't look at the stock. I just
Yeah. So the stock was up yesterday from 19.30, €19.30 up to over 22 euros. That's an interesting one. I wouldn't have seen that as a bid target, I must admit.
Well, I mean, it's been aggressively sold off. So it's one of the world's top brands. So if you're going to buy a distressed asset at a,
I'm sorry. Did you just call Puma one of the world's top brands?
well, it depends. On relatively speaking, I mean, it's in the world of Puma's still a big brand in the world, mate. Whether you like it or not, it is.
Is it not dying though?
Yeah, kind of. I suppose so. I don't know. I mean, maybe. Yeah. I mean, it's certainly not.
Unless you're a Man City supporter, like literally, that is the only.
Yeah, maybe it's dying. Maybe it's dead. Who knows? But it's certainly on its knees. So if you wanted to add something into the art,
that's true.
There's obviously some value being seen there by the Pinot family, anyway.
Yeah. Right. We've got. Let's see the winners in Europe. There's not many. ASML up.
Yeah, well, let's talk about ASML because it's interesting, right? So upgraded today at Bank of America, and the reasons for that being, I couldn't agree more. I mean, I've got this in the book, and it fits the bill across the board, right? But by the way, sorry for those who are live. I can hear producer Phil talking constantly. Is that can the viewers hear that, or is that just
tell
me
them to stop wittering?
So ASML, which has obviously been in the doldrums for quite a long time, is slowly but surely finding its feet. And what I mean by that is that all the bad news is not being sold, and it's kind of just sitting there in a very, very tight range. There was a note out from Bank of America this morning highlighting the fact that after their trip to Asia to the Samsung factories, they see on the ground the orders coming back into ASML because obviously it's lumpy and it's been delayed. So they think the China thing's going to pick up. Obviously, the chips deal with the Americans is a net positive. So net, you're dealing with a very, very de-risked, unloved, large important company in Europe that is kind of on the turn. It also fits into the rotational theme. And if you look at a day like today, right? Look at a day like today, ASML is up 50 basis points, rock solid. No sellers anywhere to be seen when the market is very heavy. And that's the kind of stuff that I want to be long in this market.
Because it's very necessary in that supply chain, isn't it?
Well, I mean, it's critical. I mean, you can't. These next gen chips that are being made, they cannot be made without their machines. Full stop. So it's just a matter of the lumpy orders that were made. Now getting that inventory going through and them just coming through with the new orders. Plus, there were some people that waited for their next batch of orders to see what the outcome of the US-China chip regulations and it was going to be. Now we have that clarity, so that does open the sort of doors for those next orders to come in.
It was bizarre seeing it trade under 600 euros, wasn't it? It felt like a real washout.
Yeah, I mean, it did. I mean, they had two. Bearing in mind that their CEO, who's Dutch, is very conservative, right? He doesn't. His culture and the way that they do things could not possibly be more different to the Americans. You listen to an American conference call, and they talk themselves personally up. They talk their company up. And they're just all they're doing is it's like a sort of cheerleading. It's like an NFL game, right? Everything's so amazing. Where you listen to an ASML conference call and you've got some conservative Dutch guy who's basically just saying, things are not looking good, and I've got no idea when they're going to get better. Which is, by the way, ultra conservative. Like he came out and said, I have no visibility even into 2026. Like things are really dire. Right, so we're like, okay, wow, they're not even that bad, by the way. But he made it sound very bad, which is why I like it, because he's thrown the most awful expectations into the market, and the stock still didn't make a new low even after he said that. So I think it's very interesting, and it's definitely in my book on the long side.
It's tricky, and you certainly know all about the Dutch, don't you, Piersey?
I know a little bit about them, given my wife is Dutch. Correct.
Exactly. So, and it's, yeah, I asked producer Phil this morning. I think we should have a microphone on producer Phil, so we can get his little comments. Like, I can't find what you're talking about in the FT. So I think by Thursday or Friday we should have live comments from the studio, and it's something I'm working very hard to get a camera in that gallery as well. So don't you worry, viewers. Good, right. So ASML, that's one critical part of the supply chain, but another one is Marvell Technologies. Have we got an exciting week ahead of us, Piers Buckworth?
We do. So today's Tuesday. Today is the only day of the week when nothing happens. So today there's going to be just a very sort of nothing tape. Tomorrow we obviously have NVIDIA. Thursday night we have Marvell aftermarket. And
Big
Marvell, listen, as mentioned a million times, not many people even know what this company does, right? For particularly people who don't follow US tech. But it's under the radar. There's been a number of stealth upgrades of this company over the last 3 or 4 weeks. I sent a couple of them to you over the last couple of weeks. Bank of America were out yesterday. Listen, it's de-risked, it's under-owned, it's underappreciated. The CEO has made it crystal clear that their high bandwidth custom memory that they're making for the AI space is fundamental in the process, and they're basically the only people that do it, to use his words. 1.9%. Sorry guys, that's my Bloomberg. So yeah, I mean, listen, I don't often feel comfortable going into an earnings report long, to be honest with you, or have any position, but this one I do.
And it's the kind of numbers we're talking about here. They currently have 6 billion of revenue, roughly. Is that right?
No. For what you mean, their overall revenue or their AI?
Yeah, sorry, overall revenue, not just in the AI part. But JP Morgan yesterday talking about an increased revenue in AI of 2 billion, so which is significant in their numbers, isn't it?
Yeah. So they, so revenue for 2025 is 6.5 billion, and the revenue projections at this point for 2026 are 8.2 billion. By the way, that's a 43% increase in revenue, right? So that means their revenue is growing essentially in line with Palantir.
Yeah. Right? And guess what price to sale it's on? Is it on 20, 30, 40?
You want to have a guess? What price to sales do you think Marvell's on?
I'm going to go for 10.4.
9.71. Okay, they're growing the same. They've got wider margins. I mean, I don't even think we should bother even continuing to talk about this, but this is one of the. This is a company that's growing. This is growing. Let's just be clear about this. When it comes to growth companies, you need to price to earnings ratios don't mean that much. They do to a degree, but price to sales ratios for these, if you're above 40% revenue growth, you need to look evaluation wise on the price to sales. 9.7 times sales for 43% revenue growth in this world with AI is cheap as chips. It's so cheap. The only ingredient that's missing from this pie is the fact that the market don't get this, and they haven't quite cottoned onto it yet. But this is not an unknown company, right? Everyone, people, tech traders, and everyone, when the market decides to buy Marvell, it just goes up like a spaceship, like a skyrocket, straight up. So it's we'll see. We'll see what the numbers are like. I feel positive.
Yeah, they are. Of course, the numbers are risky.
Numbers are always risky.
Yeah, numbers definitely. So
I hate them. It doesn't matter how much you like the company. They can say something on the call. They could have a quarterly reporting is really annoying, right? You've got 4 quarters in a year, obviously. So they're broken down into little segments, and companies by definition have ebbs and flows. So it's not quarterly reporting is very difficult to trade around. And as I said, I like the setup into this one. But if it comes off a little bit, I don't. Who cares? Just that's a good opportunity to buy, and I would imagine it would be a huge shock, a massive shock, if they came out and reversed course of everything they've been telling us.
Of course.
Right?
Yeah. But as with ASML, we saw that there's always downside as well, isn't there? But you know, I hold them at the moment. I've got them in my portfolio. I've sold my ASML. There's just the really nice run up to. I sold some of those at 640. But Piers, everybody, I've started selling Vodafone. That's right. The FTSE has moved so much that at 89 pence, I have started to let some Vodafone go. Still believe in the story, but you know, you become accustomed to stocks having a bit of a pullback when they get to something like 89 pence, and yeah, I'd buy them back at 82, 83, something like that. But yeah, going from 72 to 89 with a couple of dividends in there as well, just trimming a bit of those. Right, Piersy, fancy having a little break? And then I noticed Kukumba talking about some football on the chat there. So it could be time to get up the Fantasy Football League after week 2 when we come back after this break. We're going to Fast Markets after that. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Right, welcome back to Trade Live with IG on this Tuesday. It feels like a Monday, of course, but that bank holiday flashing by. Is that the last bank holiday of the year? I think it is, isn't it? Well, Piers doesn't care. He doesn't take bank holidays.
Yeah, they're not irrelevant to me.
Right, welcome to Fast Markets. So we're first going to take a look at Fast Fantasy. And let's see how the league table has done this week. Mark Lamb, stand up. What an incredible couple of weeks you've put together. So, vote for Pedro had got 76 points on the week. That was the best of the week. Then we've got Julian is up there as well. Dom Van Hal on 70 points each. John Finbar Killen had a poor week, but his first week was so good that's kept him in 4th place. Dan Gummer, our video editor, in 5th. Monkey Man in 6th. Monkey Man, 56 points. Not bad. Not bad, Monkey Man. But I did beat you. 60 points from We've Got McGaines down there in 13th place. Ronnie dropping down into 11th. Gavin Ackers dropping down into 10th. We got Luke Moore into the top 10 there. And let's have a look at the nearer the bottom of the table there. Oh dear. What is going on? Producer Phil. What's going on? Steve Davies. Gents, if you don't spend your 100 million on good players, you're not allowed to keep the rest. Right? So maybe go out there and try and find some good players. Ida Rock as well, 31 points on the week. Come on, what went wrong? So we've got some poll results to give you. The poll results, the question was, should the US government be able to have voting shares within a company? 73% of you said no, that is not a free market. Only 15% of you saying yes, it all makes a market. The government should absolutely get to vote. So we've got some socialists on the voting there. Right, now we had a question, Piers, from our good friend of the show, Neil, away from the numbers. Any thoughts on Guard Force AI or Snowflake?
Guard Force, no, I don't know that stock well enough. So I'll move on from that one. We'll talk about Snowflake 100%. Again, that's another big earnings report that's coming out. Hang on. It's quite nice being able to do this from home because I've got all of my Bloomberg screens in front of me, which means I've actually got more information than I normally do. This is great. Right. So Snowflake are 27. So what are we today? 26. So tomorrow. So it's there along with the video tomorrow. So tomorrow night, Snowflake. Now listen, Snowflake are fascinating because this is right. This is the one of the closest comparisons you can have to Palantir, given in terms of what they actually do. We've talked about it a lot on the show before. The bottom line is, again, they're growing their revenues at, let me just get the exact number for you, 24%, so 25%, 24.9, and they're trading on a price to sales ratio of Bloomberg 16 times. So again, there's different rules for different players. These guys are an AI software data center play, so they get a higher multiple. It's just the way it is. But they're still very cheap versus Palantir if you consider the like for like situation. Now their last 2 quarters have been very solid. Both of them have been beat and raised. The stock hasn't really reflected that if you look at the performance of it. I love Snowflake. I think it's a winner. I think it's a one that you've got to have in the book. But going into, I think the earnings probably all the channel checks suggest it's going to be a positive earnings report for them. So we might see a little pop. I'm just wary of the fact that the market is kind of rotating away a little bit from these kind of names, and this is going to have to my instinct is that they need to increase their growth at 25% isn't quite enough. They need to get that above 30, I think, for the market to start getting interested in them and for the momentum to build again. So I love Snowflake and I think it's one to own, but I don't think there's any particularly near-term big move coming up in Snowflake. I mean, we might see a jump on the earnings, but I can't. I mean, it's a bit. I can't see how we're going to see that's going to kick off a new momentum wave to the upside.
What would you rather own into earnings, Snowflake or Nvidia?
Do I have to own one of them into earnings?
No, you don't. You don't. You can even be short if you like. Listen,
I think shorting Nvidia into earnings is never a good idea.
It's tricky, isn't it? 181, is it?
The thing is that, like, we saw 2 upgrades of Nvidia yesterday. right? So the analysts are very, the analysts are frustrating and chasing themselves around in circles a lot of the time, but they wouldn't be up, but they would not be upgrading this stock a day or two before earnings unless they were looking at, because these guys are obviously speaking to the company and looking at the channel checks, and this is what they do for a living. They wouldn't be doing that unless they were very, very, very confident about what they're about to hear. I think the wild card here, and that's something that the analysts do not know the answer to, is what are they going to say about China? China is 10% of their business. It's about $8 billion in quarterly revenue. Are they going to tell us that China is a 0 or a 50%, or what are they going to say to us about China? Either way, the bar is very high for NVIDIA. So listen, I wouldn't bet against NVIDIA into an earnings report ever, unless I had some sort of very strong feeling it was going to be bad, which I do not. But I am very keen on fading a move to the upside in NVIDIA. So if NVIDIA beat and they go up 4 or 5%, that'll take them up to all-time highs, and then that will fit perfectly into my rotational theme here. And I think you can probably fade that move. But I just, unless you have to have a position into earnings on NVIDIA, I would just avoid it, because quite frankly, anything could happen. They could be up 6 or they could be down 6 if they say something about China. I don't know, and I don't know. I've got low conviction, so it'd be silly of me to suggest that they're taking a position.
What do you think the maximum they could be up? And I asked that, of course, for our friends that are still playing options.
Yeah.
I'm just going to take a quick look what the expected move is now. But yeah, what would surprise you?
And well, listen, in terms of the magnitude of earnings moves for NVIDIA, 7-8% at this stage in the game is a big move. The 15 to 18% moves that we saw when ChatGPT burst onto the scene, those are no longer going to happen. So I think it's more likely to be a 3 or 4, but a 6 or 7 would be a surprise in either direction, in my opinion.
Because we're talking about upwards of $300 billion moves at that point, aren't we?
Yeah, we're talking about 2 Intels in a move.
It's just absolutely incredible. And that, to be honest, that's what I see limiting the upside in NVIDIA. Because to move from being worth 4.3 trillion to 4.6 trillion, it's just the law of large numbers. I don't think that they can grow earnings by enough or give the market enough confidence to add $200 billion to their already.
Yeah, well, I mean, I think you have to be careful getting too excited about the market cap moves, because the media love to go on about that as well. I think it's because it's just given the nature of this beast. But listen, let's assume the analysts are right. The analysts have got this 40% higher. So, in the most of the top analysts. So
well, just to producer Phil was doing some great work there. So he got up the tip ranks for you. It's almost as if he's been watching how I move around the platform. And you saw the average price expectation was $199 there. But Piers, you've seen price targets higher than that.
Yeah, I mean, what have we got here? Well, let's just quickly just bear with me one sec. We'll just get these.
Who do you think the person to listen to? Is it Dan Ives?
What? Oh God! I mean, listen.
I knew that would get you.
Yeah, I mean, okay. So we've got 220 at BNP. But definitely don't listen to them. 225 at Baird. Wait, hang on. Let's just go through the guys that matter. Stifel, you listen to them. 212. Evercore, listen to them. 214. Wedbush, Dan Ives, 210. Let's just use Dan Ives, right? The most bullish bloke the most bullish guy in history. 210. So we're at 180 now. So that's what I'll use as my marker for the most bullish person, because Dan, regardless of how much he can be frustrating, is the smartest guy in the room with these tech stocks. And he, if there was a reason to be up at 250, he'd be at 250. So But then again, it doesn't mean much. Like if they smash numbers, he'll just raise his target again, and it will be at 250. So I just think that it's a fool's game playing around earnings reports. It really is. I mean, listen, it's the only confidence that I have in fading the move is a big picture thing. It's not necessarily what's going on at Nvidia. It's about the market having made a decision that now's the time to start fading these exuberant moves. But the problem with Nvidia that makes them so different to Palantir is that they're actually not that expensive. I mean, they are expensive, of course they are, you know, on a historical basis. But in terms of a real, like what's actually happening right now in terms of their forward earnings growth and their forward revenue growth, they're not actually that expensive.
Do you know the thing that worries me here, and it's a very different industry. Having traded through the 06-07 super cycle in the mining stocks, right? That's when China was in its commodities super cycle. This is what Nvidia feels like to me. They've gone through and are going through and are probably right at the peak of a CapEx super cycle. Does that continue, or do you actually see CapEx spend drop at some point? You know, is a 27 number? And the reason I ask that is because you shouldn't be valuing earnings growth on a 35 times multiple if you're actually at the peak.
Agreed. And I mean, and let's break this down. So Nvidia for this year, the expectations is for 55% revenue growth, right? Which by the way makes them grow. They're growing at 7% faster than Palantir, and you're paying 30 times sales for that. Okay, so which is 1/5 the price of Palantir. So but the question is we fall off to 33% next year. And as you just pointed out, this CapEx cycle, which has been very aggressive and very front loaded, is it's not a question of if, it's a question of when is this CapEx going to slow down. And this is one of the top stories and narratives in the market. And you've got the likes of the FT, again, who are, as I said, always a relatively bearish media outsource, talking about this almost on a daily basis, right? I've seen 3 articles from the FT, one of which was just regurgitated from Bloomberg, but nonetheless, they're banging the table on this thing, on this message that the CapEx cycle is ending and it's going to slow down dramatically. Now, if that's accurate, these guys are the ultimate picks and shovels, so of course that's going to slow them down, and I agree with that, and I find that, and I that's why I'm very hesitant to be chasing Nvidia up here. But it will have another moment at some point in the very not too distant future. It may well be after this earnings report, where it has a big drawdown, because that's what Nvidia does. It becomes really sexy and very fashionable, and everyone piles into it, and it's all backed up by numbers, and then it goes off the boil and has a big drawdown. And I feel we're close to that moment now.
And I completely agree. And even longer term, I think you should have 2028 earnings. I think you should have them on like a 22 times multiple.
I mean, and that's reasonable. But I mean, what's reasonable and what happens are two very, very separate things. It's a question of when is the market going to have its moment of reflection and take a deep breath. I've put my neck out with all the people I speak to about markets and said that moment is upon us now. We just have to navigate this earnings report from Nvidia. Now, it may well be the catalyst for all this, right? Nvidia may well have an inline quarter and tell us that China's not so good, and the stock might sell off. And then, the analysts are irrelevant at that point, because the analysts are always after the fact. So, so we'll see. But I mean, I just don't think, making decisions before a Nvidia earnings report with no real signals that the CapEx has changed much is a pretty silly thing to be doing. I think we wait until afterwards and hear what they've got to say. And let's not forget how important they are, right? You've got the macro, you've got growth versus inflation, and you've got interest rates, and you've got earnings, which are the traditional pillars of a market. But now you've also got AI capex, which is another pillar of the market, and these guys are the poster child for that. So it's critical what they say, and it will change the narrative. And the algos and everyone will, if it's an amazing report, we will end up higher, right, in everything, them and the NASDAQ. But what then is my question. And
yeah.
And unlike previous quarters where that just kicks on, and look at Microsoft where they upgraded their guidance, and then they've just literally gone up in a straight line for 3 months straight. That's not going to happen with Nvidia.
And have come back now though. That's quite interesting, the way that Microsoft's come back to earth.
Well, I'm not sure if it's come back to earth. Yeah.
Oh, it's significantly lower than where it was after those earnings.
Yeah, no. Oh, sorry, I was talking about the earnings back in April, mate.
Yeah. No. But that was people expected it to go again, and that was the.
No, exactly right. And you and I spoke about it on the show, and I think that's exactly what will happen with Nvidia. Exactly.
Well, that's a great. Yes, I like that a lot. So what you're saying, the expected move on Nvidia on numbers is $11. So we're talking about 5.5% there, or just over 5.5%, 6%. And yeah, that takes it up to 192, 193.
Yeah, and to me that's cooked. That's done. Now you can sell it at that point.
Yeah, and this is what we saw happen to Microsoft. Microsoft traded up to 530. In fact, it went higher than that, didn't it? Yeah, there we go. Microsoft traded up to 560 on the day of its numbers and has sold off 10% since. And that's, I think that could be a very good shout. We see Nvidia trade 195, and then it's back down at 180, where we are at the moment within a month to 6 weeks after. Piers, it's been wonderful as always. Sorry, thank you for joining us on this this beautiful morning and letting us into your home there.
It's been a pleasure, guys. Happy trading.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Welcome, everybody. So we go from one expert to another this morning. We have a treat for you. Julian Wheeler joins us again. Good morning, Julian.
Good morning, Philip. Good morning. Nice to be with you again. Although not with you this time.
Yeah, exactly. Yeah, we're waiting for this studio. We haven't had the update on how it's looking yet. I was expecting a photograph this morning of a nearly finished studio, but I'm worried I haven't seen anything.
Right. Okay. Okay, well, luckily we can all do it this way now. So.
Now, you must be somewhere as beautiful as Angelina's on holiday with that background.
I'd like to say I was, but I could just show you my rather dull West London flat otherwise. So I thought this was better for a nice sunny morning, new week, just had a bank holiday. So, I thought this was the most appropriate one I could do.
And it's going to be an exciting week, isn't it? Because by the end of this week, we're going to know the market's reaction to this move from capitalism to corporatism. And you've got a few thoughts on this Intel stake build, or is it a stake steal from the administration?
No, I think the full details are still sort of coming to be ironed out, if you like. But as I understand it, so this is the government wanting to take 10% ownership. Trump flagged this a while ago. The market raced the stock up, and I sort of said, well, maybe not too fast, because let's see what they want. But they're actually putting in 8.9 billion, and then allowing Intel to keep the 2.2 they've already paid them. So they're roughly coming in at 10% at just around the current price. They take no special golden share. They take no governance, no board seat. So in that sense, they're just like any other investor. And talking of any other investor, SoftBank bought 2% at the same price. So this $23 a share price seems to be. So I reckon that's the floor. The difference is this is not a bailout, right? They're not bust. Intel aren't bust like the banks were bust in 2008 and needing to go to the government to stay alive. It's just the CapEx cycle is so expensive, and NVIDIA missed a couple of steps. I mean, you go back to the history of Intel missed a couple of steps. One was that they missed the offer from Apple to make the iPhone chips. That was a pretty bad call.
Ouch.
In 2005, they should have made all the chips in every iPhone, but the then CEO said, "No, you're not going to pay us enough. It's going to be a bit of a niche product." Now, of course, that sounds really stupid now, but you've got to remember back then, Nokia was the market. And, let's never forget, if you're an Apple shareholder, never forget, there is no divine right that we all have to have iPhones. Who knows? Anyway, so back to Intel. So the government's putting money in. And the question simply is this old Intel or is this new Intel?
Yeah, definitely.
And new Intel, I would mean it becomes just a foundry operator. So it just becomes the manufacturer. Trump has said, I mean, you see it every day, but actually, we want more manufacturing in the States, and we want good manufacturing. He's worked out he's not going to make Nike trainers in the States. He hasn't got the labor force for that, let alone the cost base. Those aren't the jobs they want. They want drugs made in the States, not made in places like Ireland or something. They want semiconductors made in the States, which means not made in Taiwan. And this is key, because we all know where Taiwan sits. It's 100 miles, it's a 100-mile island about 30 miles off the coast of China. And the world has a really, really stupid position right now, which is that 70% of all the world's semiconductors are made on that island. That's not
so dangerous.
Well, it's not clever whether China does something. It's also all part of what you call the Pacific Rim of Fire. And there can always be an earthquake like Fukushima. And then you would lose the world's semiconductors. It'd be more serious. That's more serious than if Saudi Arabia stopped pumping oil. Saudi Arabia is about a third of the world's oil. Taiwan is over 2/3 of the world's semiconductors.
Wow.
So that's why the government's actions, I think, are pretty sensible, because you've got to get Intel back in the game. They don't have the money. I mean, that's the reality. They've missed out, and customers, it's very chicken and egg. Customers don't want to go to them because they say, well, we know TSMC makes these very, very well. You know, TSMC is a great company. Let's not beat about the bush. Great company. However, it's just rather badly situated. And so now you have the problem. America wants to bring them here for national security, for jobs, etc. And by buying into Intel, they can do that. You've seen recent announcements the last couple of months that both Apple and Nvidia are going to invest hundreds of billions in the US. Well, where are they going to do that? What are they going to do? They're going to give it to Intel. That's what I think. That money's going to Intel, and they will be strong-armed. And Trump is the man for this.
Absolutely.
Yeah.
We've never seen the likes of it before, have we? That there's he'll stop at nothing to get his way, because he's very confident his way is the best way.
Yeah, and he's got a political backing and mandate. It's become quasi dictatorship over there. I mean, he's just fired one of the Fed governors last night. Lisa Cook refused to resign, so he's fired her. Yeah. This is what I'm worried about. I'm much more worried about stuff like that rather than the individual companies. Who's to say the tariff policy, if applied, sensibly, not the crash bang, wallop he started with, but who got the better deal on the EU tariff? I'd say
no question about that.
Yeah. So with Intel, what he's doing is, so he's putting the money in, and he's saying, right, we're going to be the manufacturer. So therefore, Apple, your money's going to Intel. Nvidia, your money's going to Intel. And so it will go on. If Intel then becomes just a manufacturer and more or less gives up chip design because they are so far behind, that then would be good for all the other fabless five as they're known. That would be good for Qualcomm, it would be good for ARM, good for AMD, etc. And probably net positive for Nvidia too, because they'd have a second source. People it's bad for is TSMC.
Yeah, I was going to say this sounds potentially. How much of their market share could be taken away?
That's a good question. Intel is still behind TSMC, but the reality is they're behind in terms of cost, as in they're trying to move to a new technology. If the technology works, which we think it does, it's a matter of cost and it's a matter of scale. Like any manufacturing process, if you make one widget, it costs £1,000. You make 100 widgets, it costs 10. You make 1 million, they cost 1. So the more customers that Intel can have, the more effective it can become. You say, well, it'll take a long time for Intel to become as efficient as TSMC. But Trump can change the game. Trump will just say, fine, the yield, which is what we're talking about, the yield efficiency of Intel will be offset by just tariffing Taiwan. You'll notice there's no trade deal with Taiwan yet. How about everything coming in from Taiwan gets a 50% tariff, 100% tariff?
Wow.
Right? So go ahead, make your chips in Taiwan, and we will tariff them so that they are cost competitive with what Intel is making in the States. Why not?
Has there already been a deal with TSMC for them to bring production onshore into the US, though?
Yeah, yes, there has. And I'm not saying that Trump won't allow that as well. He doesn't want to give Intel a monopoly. Although if he owns 10%, he's...
Well, I was going to say that changes,
It's more incentivized. But no, TSMC are talking about and have talked about and was very publicly, they are building a plant in Arizona that's going to be very big indeed. But they've slow rolled it. And the reason they've slow rolled it is they've got a problem. Because if they move their manufacturing to America, why does anybody need to come to Taiwan's rescue?
Wow.
So there's going to be massive geopolitical issues here. And so why I say TSMC is a loser is it's simply this. They're now worth $1 trillion. Right? They've had masses of revenue. They are a virtual monopoly. in the good sense. They are just the only people who can do what they do. Samsung does it as well. And to keep Samsung in the game, you'll notice, or you might not, Musk, his XAI, they gave a decent sized contract to Samsung the other day. Not because TSMC wouldn't do it better. I'm sure they would, but they've got to keep Samsung in the game. We've reached the point where TSMC is so dominant that it's bad for everybody else. And it's bad for their customers, effectively. I mean, you do not want one supplier. And the world doesn't want one supplier. So all I'm really saying with TSMC is it doesn't get any better than this.
Exactly. It doesn't get worse quickly, but it doesn't get any better. And slowly over time, which is great, because when we're looking at the options market, then time becomes very relevant and we can structure the trades in that way.
Yeah, I reckon you can be a call seller of TSMC all day now, because the upside, they're not trading on nosebleed multiples like some of these high flyers, but TSMC is still cyclical. I mean, you only have to go back, if you've got the chart for this year, it started the year around about 200 and something, and quietly, or rather quickly, dropped to 140 by April. It's gone from 140 to 240.
Wow.
So, I mean, April to August is $100. There's plenty of room. I mean, as a hedge to your portfolio, putting a short on that versus being long some of the other ones, I'd be quite happy with that. There you go. That's it. Good. That stock, for something that is allegedly a stable monopoly, that's a very, very volatile chart.
ASML, we've been talking about this morning. We covered up to 650. How does this affect ASML?
I think it's good news for ASML, because ASML effectively only has two customers, TSMC and Intel. And the worry was that Intel, they said, we're going to shut down. I mean, basically, the new Intel CEO, Lip-Bu Tan, I mean, it's not quite blackmail, but Trump probably appreciated it. He went around and said, look, Trump, I'm not doing this, okay? I don't have the money to do what you want, which is put it all into CapEx, spend a whole load of money with ASML. You know how much these ASML EUV machines cost, do you, Philip? About 300 million each.
Right. Oof.
Okay? It's really not small potatoes. So there are only a handful of people who can actually afford it.
Yeah.
They are TSMC, Samsung, Intel. And you'll notice the difference. Samsung is government-backed. TSMC is, in fact, government-backed. And now Intel is too. So it's great news for ASML, because it means their other customer is back in the game.
Good. Right. So if anybody wants to read more about this, then Julian has written a wonderful piece, Over the Pond, Trump all in on chips. So our producer is going to pop that link into the chat, if you don't mind there, Julian.
No, that's fine. Thank you. Yes, I published that. I published it last week. I actually wrote it before this all happened. It's really rather annoying that they move so fast.
They did move fast as well, didn't they? Now, you've got a stock you're interested in that is reporting this evening.
Oh, yes. I told Angeline about this, so I'm being consistent. I told her a couple of weeks ago.
She'll be happy.
It's called MongoDB. DB stands for database, and there's the clue for you. MongoDB had its run in the sun a few years ago. It was a classic COVID winner, because basically any operation, there you go, there's its run. It had a huge move based on providing database for transactional databases for online e-commerce. Think of it like that. So, if you were a small business, this was the type of product you used. Now, the reason the market's come down on it since, they said, yes, well, now that's as good as it gets for you, and you're running out of road. And sure enough, they are, they have lumpy quarters. It's not easy business. But what they've created is called a vector database. And just to keep it all simple, basically their database allows you to put anything in it, not just binary. It takes any data. So whether it be that image, that chart you've got, a little, your little YouTube clip with Trade IG, you can put it all into a database and have it all turned into zeros and ones. which is what a classic database does. And it just so happens, we think, that this database works perfectly for all the use cases you're going to do for AI. So the call is, this could be a moonshot if the market finally decides this is the database that is most efficient, fastest, and cheapest for handling all your AI cases.
Wow.
And they had misstepped for a while. And you see that gap up in the last quarter, a little gap there in April. It went from like 200 to 230 there.
I see it.
Yeah, that one. Right. Well, funnily enough, it did, when you were talking earlier about what happened to Microsoft, it did a classic massive move on the earnings, but don't be fooled by that, as in that's good news, but be patient. And then as you can see, it back and filled the gap.
Yeah.
And there at 200, it's buy. And the market took off and we had the last hurrah run into the beginning of August, and it's come back along with Microsoft and Palantir and everybody else just now. But the key point on that last quarter was they said they had the biggest sign up of new customers in 6 years.
Ooh.
Now that tells me they're doing something right.
Yeah.
So it'll take a while for those new customers to turn into revenue.
Okay.
The other good thing is they do 2 billion in revenue, and the market's it's a valuation of about 16. So it's on about 8 times sales.
Right.
Now, in old money, we'd say 8 times sales is rather expensive. But in this AI world, let me give you a comparison. There's a thing called character AI. I don't know much about what character AI does, but it better be good, because they're just doing a private round I'm reading this morning that they're going to be valued. They do 50 million in revenue, right? 50 million. And they want to be valued at $1 billion.
Wow.
So if they're worth $1 billion, then this thing's worth a hell of a lot more than 16 billion. That's my point. It's 8 times for one of these companies. So if they report a good quarter today and then talk about it, you should think of them in the same bracket as things like Snowflake, which is public, and Databricks, which is private.
Okay.
And both of them are worth probably twice what Mongo are on a price to sales. Yeah, on valuation to sales, they're about double what MDB is.
Excellent. Wonderful. We'll keep a watch on that one tonight. That makes it a full house, because that means we've got MongoDB tonight, we've got NVIDIA and Snowflake tomorrow, and then Marvell Technologies to watch on Thursday. Now, we cannot let you go without having your thoughts on this Fed independence question, that the whole Lisa Cook dismissal has conjured up. Do you think the bond vigilantes come in now they realize that Powell hasn't been sacked, but Trump is going to be running the Fed through his appointees from, February onwards?
Well, it's a difficult one. I think, first of all, the market, so the bond vigilant, you're really talking about the bonds. The bond market will decide as and when. So we're now pretty certain we're going to get a September rate cut.
Yeah.
If that rate cut looks, shall we say, justified. So if between now and then we have economic figures related to costs, labor, inflation, particularly labor, I think, that do suggest there is a slowing. And a lot of people start to think that's true. Then they're going to say, all right, the way Trump's going about it, we don't like it that much, but we've got rates at 4 3/4. Inflation is sort of under control, so we do have positive real rates, and we have got room for 25 bips. I think if he did something like 50, the market would panic.
Yeah.
I think if he does 25 and he goes, there you go, it's your 25, and we can justify that based on what we see, and we're now going to continue to watch, so that it's all pretty consistent with what he's previously said. So if that's all the same, I think the bond market will say, all right, we don't have to panic yet.
No.
Even if Trump doesn't like Lisa Cook and he gets rid of her, it's not good. It's not good, no question.
What happens if the job number comes in at 125,000 on the 5th?
125. I don't think 125 is why is that what you've heard as the outlier number?
Oh no, sorry, no, I'm just, if it comes in strong. So suddenly you don't, because at the moment Powell was very clear, it's balanced between inflation and unemployment. If inflation is coming in hot, as that PPI suggested, and suddenly there isn't a balance of concerns, what happens then?
I think you'd need for Powell to look like he had to slow down. I think you need a number, say 200.
Okay.
Something like 200,000, a really big number, and that's what I call big, because the market, you have to create to keep the economy going in the States. You need to be creating roughly 100,000 anyway. If you create less than that, unemployment will start creeping up. So I know we're talking. I think a really massive number of 200, then the bond market might say, right, you don't need a rate cut now. The economy is still strong. So if you've got a combination of a massive job number and another bad CPI that followed on from that PPI, then the market would start saying, well, wait a second, you shouldn't really be cutting rates, should you? And then if he did, they might take fright then.
Yeah.
But I think, yeah.
Sorry, Julian.
No, I was going to say, but I don't think that's going to happen. I think there is some weakness from what I'm seeing out there. In amongst what the companies are saying, the strength in the housing market, what we've seen from Home Depot, what we saw from Walmart, the sort of retail consumer sector. And the other thing is that this economy is being so heavily driven by this AI capex right now, which is going to end. I mean, it is going to end, as in it's not going to keep going. It's just not possible. No. There's no payback. That would be the worry. I just can't see it yet. And like all these things, it won't happen when we're looking for it.
Julian, thank you very much. That's excellent. I almost started another conversation about, I was having a coffee in High Street, Kensington on Friday, and two gents beside me started talking about something called symbolic AI. And they said that AI as we know it is completely unsustainable. And in 2 to 3 years' time, we will not be doing AI the way that OpenAI currently is. But we can't go there because the old session's already open. But it's an interesting one. We can touch on it next time if possible.
I will try and look that one up for you.
Good stuff, Julian. Thank you very much. We're going to go for a very quick 30-second break and then into all sessions. Julian, have a wonderful day.
Thanks very much, Philip. Been my pleasure. Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Welcome back, everybody. So straight into all sessions. There it is. We missed the bell because the conversation was just too great with Julian there. So we're going to be looking at the movers. It is Moderna at the top of the leaderboard there, up 50 basis points. Boeing also up small, $227, and Coca-Cola. But that's not the exciting stuff, is it? We see Nvidia holding the 180 level, but let's look at the down moves this morning. Well, there they are. It's Palantir Palantir down 90 basis points this morning, 155. It seems to be kind of stuck on that 155 level. Oh, did I have a wonderful week last week at the Edinburgh Fringe because of that little beauty. Boise was messaging as I was sitting in Edinburgh Princess Street Gardens, and the stock was 144, and we kind of decided that's enough. It's gone far enough. It looked very oversold on that on the Wednesday, I think it was. So I covered my short there at 145 and actually sold some puts because I think the stock just trades between us kind of 145 and 175. So 145 to 175, I have a short strangle on. So the old I think 150 puts and 175 calls is what I'm short now. So Palantir trading 155 just feels roughly the right price, doesn't it? Tesla 344. That one continues to just defy gravity. So Tesla down 72 basis points at $344. Then we've got Intel giving up some of those gains. As we said, is it a concern or is it a great thing? Julian certainly believes it is a great thing. Intel, that 10% stake in the government will help them to grab that market share away from TSMC and to bring more jobs and more foundry into the US. So going on what Julian said, Intel now is one for the long term by the sounds of it. And you know, you wouldn't be completely surprised to see them up at $30 bucks. So, you know, is $23 the low? So $23 was where SoftBank paid for their stake. Is that the new low? Will there be long funds getting involved? Will Buffett get involved? As we know, he's got a big cash pile there. What else are we seeing this morning? AMD down 50 basis points, and Salesforce has been a weak one. Salesforce down 246 bucks. But it is, yes, certainly a slight tilt to the red this morning. MicroStrategy, do you know what? I haven't seen that one for a while. 342. And my goodness, what is going on in SWC? So let's cross over to the Smarter Web Company, because this imploded last week. I did actually buy some on Friday at so £1.40. I bought them at on Friday, just before Jackson Hole. So they had a decent day, decent move. In the end, they were down 11% at that point. But it's tricky, isn't it? Because they're back now. I think it's 1.9 times MNAV. There's an article in the Financial Times this morning from one of the columnists, Dominic O'Connell, talking about Bitcoin treasury companies, saying that it's worthwhile getting your head around them. I think we've got our head around them here, but yeah, I did not expect them to see. I did not expect to see them down at £1.50. Now, I did see one of you on chat this morning saying that they had an update. So they've taken in 3.7 million. That's from the ATM. But I think the stock really needs to see Andrew do equity raise or a convert. If we saw another 20 million convert, that might put a little bit of belief back into this price action. Now, just to give a little bit of context, though, it is not just MWC SWC that this is happening to. Metaplanet, if you look at Metaplanet, exactly the same. They've come down from 1,900 down to currently 837. So very much a similar pattern. These Bitcoin treasury companies, the multiple has come down from, well, Strategy has been as high as 4 times MNAV, and Strategy is now only 1.55. So it's interesting to see the way that things have come off. Right, it is 9:09 a.m. Just a final look at the futures. We're seeing the S&P 500 6,430. We're seeing the NASDAQ 100 just under the 23,400 level. FTSE 9260 down 66 basis points on the day. FTSE giving up some of its move. Are you worried about inflation in the UK? Are you worried about potential tax increases coming from Rachel Reeves in the budget? Bit of weekend press there, which was negative. We will go into the UK more in depth tomorrow. I wasn't going to even try and talk to Piers about UK inflation this morning, as I know I would get his the eyes rolling into the back of his head. But that's nearly us for the morning. Thank you very much to you all joining us this morning. I think that's been a great discussion, both with Piers and with Julian. Especially funny that Julian thinks that my name is Philip. Of course, producer Phil is who he was referring to there. I don't know if some of you picked that up, but I think Angeline set him up on purpose to get me back for saying a whole week without Angeline. Still not a round of applause from the team. I don't know, how many times do we have to try it? Right, everybody, enjoy your day. We've got Axel coming up for Trade of the Week. I wonder what it's going to be. Just looking down my screen. Is he going to be delving into the US indices? I don't think he'll do gold, because gold is kind of a bit of nothingness at the moment. Bitcoin he covers more in charting crypto. Is it oil? Oil has found a little bit of a support at the $62 mark. Could be the Russell 2000. Ooh, yes. My guess, and it is a complete guess, I haven't spoken to Axel this morning. My guess is that it will be either the Russell 2000 or even the S&P equal weight would be an interesting one. But I don't think he would go that off-piste. Good stuff. Jugger saying, Rich, we love Ange. Of course, we all love Ange. But a whole week without Ange. No.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello and welcome to Trade of the Week on Tuesday, the 26th of August 2025. What I would like to do today is to look at palladium, which we don't often look at. But if you look at the daily chart, what we can see here is that we tested earlier this morning the uptrend line going back to April of this year. And what is interesting is that this uptrend line more or less coincides with the low seen in the middle of August. And also, if you look at these lows here going back to June of this year, and then the high going back to early June of this year, and we've also got some basically support here going back to October of 2024. So you can see a confluence of previous highs, previous lows, an uptrend line, all of which may mean that we could bounce off this support area. And if we were to do so, how far could we go? Well, it really depends. But if we take out the highs seen last week, we could probably pretty easily retest the late June high. So this sort of area here. And our stop loss would have to be placed below the last big reaction low. And where's that? Well, that's this low here. Can you see here? From there, we rallied all the way up to the highs seen back in July. And basically, that's our stop loss just down there, because that is also below these highs here going back to May, as I mentioned before, the highs going back to January of this year, and also the highs going back to November of last year, all of which could act as support if we were to slide further still and dip below this uptrend line. So today's trade of the week is to go long palladium at current levels around 1096. And do that with a stop loss below the lows seen in the middle of June of this year, around 1029, and with an upside target around 1190. That gives us a reward to risk setup of around 1.5. What we also could look at is last week's trade of the week very quickly. And you can see that we went short Euro Swiss franc, and we did so here on, sorry, I got the wrong chart, and that's why I couldn't, that's the one here I was looking at. So Euro Swiss, we basically went short here on the 18th of August, last Monday, and had a very tight stop on there. And now we've gone very close to our downside target at 93.40. We went down to 93.57. So what I would suggest is we just get out of this trade, because it was a very profitable one with a risk reward set up around 5 to 1. So I'd like to cash that one in from last week. So another profit in our portfolio, which brings us, I think, to returns this year to around 27%. And that's interesting because a lot of people stopped following me at the beginning of the year when I got 4 trades wrong in a row and we were down around 6.6%. On that note, hopefully see you next week again. Right, let's go into technically speaking. Let's look at questions I've got from you. Keep them coming. And the first one is Palantir. Let's look at the Palantir share price. And we can see we've had a very nice uptrend here on the daily chart from the April lows, a very strong uptrend. And what we then saw, though, is a fall through this uptrend line. You can see here, we fell through here just last week, and that was a long bearish Marabuzo candle. telling us that this trendline break was very likely valid. But what then also happened is we actually fell through the last reaction low. What I like to see is always a trend line break. And then I go to the left of my chart and I look, where was the last reaction low? A low before, from which one we then sort of went to the new highs. And that was down here, the early August low, and we fell below it. But we only did so on an intraday basis twice last week, or actually once last week and once yesterday, but we didn't close below that. So for me, technically speaking, if we were to fall through here on a daily chart closing basis, that would confirm that a major top is being formed. Unless that happens, and also because we've had this spike low down here on Wednesday of last week, that you can take as a reference point. Unless we stay above here, we may form a top, but until we fall below that low going back to Wednesday of last week, which may not happen, by the way, and that low on the daily financial bed comes in around 14,237. As long as we stay above there, we are still an uptrend, even though we've had this sharp descent, because these sort of moves happen quite frequently in markets. It's normal. I mean, this one is a bigger one that we saw, for example, at the end of June, and also at the beginning of May, but it doesn't necessarily mean that a top is in place. So basically, I would technically remain bullish as long as we stay above last Wednesday's low. A fall through there would indicate that we fell through the last reaction low, also the previous reaction low, which was below the uptrend line, and through the uptrend line, all of which would be negative. If that scenario were to play out, how far could we fall? Well, we've got all this support area here between the highs seen since May and June and these lows here going back to the beginning of June. So that would be my first target zone. So around 12,200 and 300. And you can also see the highs seen back in February coming in that area. So that would be a short-term downside target. And then the question is whether we could hold there in this sort of scenario or not, because if that is not the case, we may actually slide all the way back down again towards the April low and the January low of this year. That would be a major reversal. But it doesn't mean these things happen. What we're preparing for is what happens if we were to fall through last Wednesday's low. As long as we don't, as I say, the trend is your friend. And yes, we've broken through an uptrend line, but that could just be flattening. It doesn't mean much in itself. So basically, we could still go higher. In this case, what scenario do we want to see? We want to go above Friday's high, which on the daily financial bed was made around 16,320 or so. If we were to rise above there, where's your stop loss? If you're long, probably just below the low seen on Wednesday of last week. And in that case, we could just grind higher again and perhaps even overcome our high that we made in August of this year. So short-term sideways trading between that high from Friday and the low from Wednesday of last week. If we break out of that range, that might give us more information of what the chart might do in the future. But it is not looking as bullish as it did a few weeks ago, because we've had this trend line break and we fell even intraday and not on daily chart closing basis, but we did fall below the last reaction low. So that would perhaps lead me to, if I were a longer term investor, perhaps move my take profit levels up to below that Wednesday low from last week. So look at JD Sports. Now, this is one that one of you is holding, because I keep getting asked about JD Sports. And yes, we did break through this downtrend line going back to, I believe it was September of last year, and did so in April of this year. Then we had retracement down, then a very nice up move here, but we fell short of that high in May. And since then, as you can see, we are trying to break above that May high. We did so back in July, early July, failed. We did so again at the end of July, failed. And we did so again last week. Question is, are we failing now, or are we just consolidating, and are we trying to break above that high going forward? And if you look at the chart, I mean, just look at the chart. Don't try to anticipate what's going to happen next, but see what the chart is telling you. What can you see? Well, even though